We hope to reach 100 by the end of this financial year. We conduct webinars throughout the year, once, at least minimum once a month. We are mostly covering topics on very niche topics. And if you see our my page right now, so these are all the content which our members have created from time to time. Through these digital contents, we get inquiries for leads, which are then posted in our FinTrack community.
Okay.
I'm very happy to say that on 19th February, we completed our first year. And now we are moving into the second year. FinTrack 2.0 is happening. We are coming out with a new website, a new structure in which we hope to give the members some more benefits. These webinars, which we are conducting from time to time, cover such niche topics. And this is obviously the last webinar of this financial year, in which we are going to cover the changes which are expected in the coming financial year.
So is there any kind of membership that you have, or how is it?
Yes, sir. So if you have inquiry regarding the subscription and the membership part of FinTrack, we can have a direct one-on-one discussion later on, post the meeting, sir.
Okay.
So without any further ado, we will start today's session. So I would like to introduce all the four speakers who are there in our panel. Hardeep ji, I would request you to first introduce our first speaker of the day, Ms. Shilpa Kiran.
That would be my honor, honestly. Shilpa ma'am, I was going through your profile and I'm amazed. You look very young when compared to the experience you have here. Honestly, I'm telling you. So let's begin with the introduction part. Shilpa Kiran has over 23 years of experience. She's a practicing company secretary, a register valuer, and insolvency professional. She serves as an independent director for a listed company. Her practice area includes valuation, corporate law, FEMA compliances, IBC, representation before NCLT. She has an experience in various industries, including banking, construction, manufacturing. She was the compliance officer of Unnati, the first Section 8 company to be listed on the NSE stock exchange. Very well, ma'am. Very well. This profile, I wish I have such kind of a profile in coming years. It's been only 8 years I have been into practice, but seeing your experience and your prompt replies, I'm honestly telling you, I wish. I'm looking forward to professionals like you. We look up to you, ma'am.
Thank you. Thank you, Mr. Harshdeep, for your kind words.
Yeah. So, ma'am, let's begin with the topic.
Yes. A very good morning to everyone. Thanks to FinTrack Advisors for organizing such a relevant topic. We are in the March 2026, and this is the right time. All of us as professionals update ourselves on what is latest, what are the amendments which are applicable for the financial year 26-27. Yes, to start with, yes, my responsibility is to update all of you on corporate law amendments. I will quickly take you all through the corporate law amendments which are more applicable for 26-27. We are not going to nitty-gritties considering the time available for us. I will be touching upon the major amendments which are applicable for the financial year 26-27. The first one is the Companies Compliance Facilitation Scheme. All of you might be aware, the Government of India has announced this golden amnesty window. As per this scheme, any overdue forms covered, for example, the annual filing forms AOC 4, NGT 7 and ADT 1, in case any of the companies have missed to file these forms for any of the previous years, as all of you are aware, the penalty for annual filing form is ₹100 per day once the due date is crossed. So if one company, say for example, approximately 300 days delay is there, 300 days into 100, approximately it will be 30,000. But now, because of this, 90% of the additional fees is waived, and instead of 30,000 from one firm, only 3,000 rupees has to be paid by the company. And the government has already added this ADT 1 also. ADT 1 is for auditor appointment. Even for this, actually, the highest filing fees applicable for ADT 1 is 12 times the normal fees. In case 600 rupees is the penalty, 12 times, that is 7,200. So instead of that, 720 rupees will be applicable. And these are the exclusions which I would like to bring to everyone's attention. Companies which are under strike-off, vanishing companies, entities under liquidation, and amalgamated or dissolved entities. Here, I would like to add a practical challenge with respect to, say, for example, any statutory auditor has not yet completed his audit for a particular previous financial year. Say 2 years, 3 years, the company was not able to conduct its audit. So there is an issue of UDIN. Because UDIN could not have been taken for that particular point of time at that time, now any professional will not be able to take UDIN for an earlier date. So in these cases, AOC penalty is not applicable, but MGT 7 automatically this fee waiver will happen. So one form, the benefit is available even if you file today. One form, it is not available. In case the financials are filed today, signed by auditor. I will just go through this circular once. One second. There is also a benefit given to strike-off. When the companies are intending to file Form STK2, at that time also there is a waiver, 25%. And even for dormant companies, that is Form MSE 1, only half of the normal fee is applicable. This is all about companies' compliance facilitation scheme. But during this window only, it is applicable. It will start from 15th April 2026 and it will end 15th July 2026. And the circular, I would like to attract everyone's attention there. It clearly mentions somewhere in the circular that, ROCs are shall be taking up, specific action after the scheme ends. Somewhere in the end, the registrar of companies concerned shall take necessary action under the act against the companies who have not availed the scheme and are in default of filing these documents in any timely manner. So all the corporates, whoever have not completed the annual filings, my appeal is that considering ROCs could take strict action, right time to avail the scheme and complete all your pending filings. I'll be moving on to the next point. The next one of the major amendment is amendment in the director KYC compliance. That is the DIN KYC, what we all call. This table summarizes the amendment. Normally, in earlier to this notification, which is effective 31st March 2026, the DIR KYC web was due for 30th September every year. But right now, the revised requirement is 30th June, but this is once in every 3 years. I'll just show the circular also. In the circular, it is very clearly given this amendment is aimed at providing significant ease of compliance to directors. All directors who have completed their KYC till date are covered under the new provisions, and accordingly, their next KYC filing would be due by 30th June 2028. So this point highlights that after 31st March 2026, as per the old provisions, KYC was due, but because of the new amendment which has come in, which states that 3 years validity is there for the KYC, the next KYC which will be due is 30th June 2028. Till that time, if today any particular director KYC is valid, next KYC will be due by 30th June 2028. But having said that, in between there is any change in mobile number, email ID, residential address, at that time, immediate updation is required within 30 days through DIR3 KYC.
Shilpa, just to pause here. See, if I apply DIN in 2027, maybe I need to remember, okay, like after 3 years, because all the DINs will not come in the same year. Maybe we need to have a track of then DINs, okay, like which is completing 3 years. Maybe one challenge will be there for professionals.
Correct, Subara. Your point is valid. But also there is one interpretation. Yes, definitely you're right. But even when there is a change, say after 1 year, I'm changing this mobile number, email ID, automatically KYC is done. That time also, whether 3 years is applicable on a plain reading, it seems to me that every 3 years only it is applicable. In between change should not be considered as a starting point for KYC. But still, that's a point which we have to experiment and see. Otherwise, on a plain reading, on a plain interpretation, you are right. Today, KYC is valid. I will have a list of all the directors whom I am expected to do KYC and then approach them before 30th June 2028.
Yes.
And in between, whoever are coming, again, I maintain a separate list. Say April, I make, then again after 3 years, then again May, June. Accordingly, the due date could be different. But for having said that, it will be June only. Whichever throughout the year, whichever we done, it will be June only.
Yes. Thank you.
And yeah, this is the major change. Mobile number, email ID, residential. Within 30 days, we have to update. And move on to the next major amendment. The major amendment next is with respect to small company definition. Slowly, the small companies were subject, other than small companies, were subjected to certain provisions. Say, for example, DMAT provisions, or this cash flow statement is required. NGT 7 is applicable, wherein company secretary practicing professional had to certify mandatorily, and board meetings mandatorily every quarter, one board meeting. All these, other than small companies, had to undergo. Now, the government of India had come with effective from 1st December 2025. In case the company's paid up capital is less than or equal to 10 crores and turnover is less than or equal to 100 crores, if both of these turnover and capital limits are met, then only it will come under the definition of small company. If any one limit is crossed, definitely it is out of the purview of small company. So this, because of the turnover limits, small, here I will just would like to highlight that the small company definition excludes holding company, subsidiary company, Section 8 company, or those governed by special acts. So for all these companies, the small company exemption is not there.
Ma'am, sorry to cut in between. There is one question. Do we have to, there is applicability if we are crossing both the limits, or just we are crossing one limit?
If both the limits are not crossed, then only small company exemption is given.
Okay. Even if we are under one limit, we are triggering one limit, that means we are not covered.
Other than small company.
Okay, thank you.
There is no word like big company in the company. It's either small company or it's not a small company. The main impact, as I see, because of the change is definition, because all earlier things everyone was aware, but there's a slight impact on the dematerialization requirement. Suppose one particular company just forgot totally to do all of these compliances, and the due date normally was September 2026, 30th September. But all this has come, I think, for November 2026. That time this circular was come. So for that particular 1 month, there was a lot of non-compliance, all the sections, whatever I have told. But that non-compliance is only for 1 month, if I can say so. As soon as this definition of small company got revised, the impact of it is, in a company which was coming in the definition of other than small company, because of this turnover or capital limit, they were expected to demat. So maybe the company would have already demat. Now many of the companies have come. Many of the professionals have advised the companies to proceed with compulsory demat. Promoters also had to demat their shareholding. Investors who were about to come in that company also had to come for demat. The company was not able to do private placement, buyback, rights, bonus, transfer of shares in physical form. That is because of the definition of the change in the, earlier they were coming as other than small company, and at that time all these provisions were made applicable to them. Because this facility now is extended for a larger companies, all these exemptions will come back to those companies. So the promoters can choose to hold their shares in physical form now. If they are in demat, they can reconvert. New investors can come in physical, and the company is free to do all this corporate action like private placement, buyback in physical form also. Company, if they choose so, can cancel their dematerialization and continue everything in physical form. But having said so, normally companies are interested to continue their ISIN only, because it gives comfort to to the investors to get their shares in demat mode. I am moving to the new point. This exactly is not very relevant to 26-27 because this was applicable for 25-26 also. But the Maternity Benefit Act and the related POSH disclosures were expected to be disclosed, especially with respect to POSH disclosures. The disclosures in the board report was expected to come from POSH Act, Prevention of Sexual Harassment at Office Space. This particular thing was applicable from the relevant act, not from Companies Act. But now these disclosures were made mandatory in the board's report itself. Last year, when these provisions were applicable, it was almost June, July 2025. At that time, year was already passed. So we have seen more or less the mandatory disclosures were made mechanically rather than looking into the actual aspects of disclosures. But now, since the board's report, which is a very material information which is given by the company, they have to pay more attention towards these disclosures, especially certain disclosures with respect to Maternity Benefit Act. I would like to add, normally if there is 50+ employees, the mandatory creche facility is required and 26-week leave. If any company wants to go through in detail maternity benefit, there are many other benefits which are required. Many issues with respect to women, either with respect to abortion or with respect to age-related certain problems what women face, as well as adoption. There are so many options which is considered by this Maternity Benefit Act, and the compliance is expected out of the company. So I request all the professionals who are dealing with companies to ensure read properly the Maternity Benefit Act, understand the disclosures, and then accordingly give a confirmation in the board report that they have complied with all the compliances which are required under board report. So such a simple thing like there has to be a register, there has to be a notice board also which discloses the benefits which are available for employees under Maternity Benefit Act. I am moving to the next point with respect to Section 186. Actually, Section 186 is whenever any company is giving loans or guarantees to any of the entities where the directors are interested, Section 186 is hit. This is not a new amendment at all. If you can see the slide, there are certain limits. If the transaction is falling within the limits, board approval. If the transaction is crossing the limits, it has to be shareholders approval. If this is not a new amendment, why am I sharing this with you? That is because of this next point. The form AOC 4, which has come in V3, this version is capturing transactions. Till now, what was required under the Companies Act is in the notes to accounts, the word details were given. Even in the board's report, details were given. But this specific point, details, was never deliberated or nowhere in the guidance notes or anywhere in the either ICA or ICSA publications, the detailed word was not given. But now, this director's report is capturing all of this Section 186 information with respect to transaction, SIN, PAN, registration, what is the type of person. When all these disclosures, many of the professionals got to know only when the new format of this V3 filings came, maybe June, July. By then, already transaction would have happened. During 1st April 2024, this was the format which had to be given, was not known to the company. So in a couple of companies, when we were scrutinizing the financials, we have understood that the company has done the relevant compliances, but they have not filed Form MGT 14. In those cases, we took steps saying that, yes, MGT 14 had to, we filed MGT 14 at the time of doing annual filing, but actually it should have done earlier point of time. So I request all of you, because of the stringent going forward, all of you are aware, V4 is, the government is taking steps to take up MCA V4, that is version 4 of Ministry of Corporate Affairs. So as there are certain transactions which system could possibly identify from the details what the company itself is giving. So suppose these disclosures are not made by the company and system is able to track out of the transactions or information entered by us, company could lead to a lot of non-compliances, which could trigger a show cause notice from the statutory authorities. That is why I have highlighted Section 186 disclosures.
Thank you, Shilpa ji. We have a shortage of time, but you have covered the compliance part brilliantly in such a short time. Now we can open the session for Q&A. Anybody has any query regarding what Shilpa ji has covered so far, kindly they can unmute themselves and ask, or they can also write in the chat and we can ask Shilpa ji on your behalf.
So I have one query for the strike off matter. Like when you said 25% discount, so is it for the particular period or like what's the motive behind it? I want to know.
Basically, the regulatory authorities are of the view that instead of punishment, let us give them one last time chance. Okay, what is that last time chance? Whatever we have, company has to file 3 forms normally: AOC4, NGT7, ADT1 for all the annual filings. Whatever additional fees is applicable, otherwise ₹100 per day for the amount of delay. This fees is now waived off and made to 10%. 25% was respect to another form, that is form STK2, which is for closure of companies. Actually, 10,000 I think is applicable for this form STK. Now 2,500. And there is this status of dormant company. This also, whatever is applicable, it will be 1/2 of the normal filing fee. These are the main. And one more thing is, immunity is given. Normally, whenever any delayed filing is there, immunity is not given. So, state authorities could still, ask us for the condoning of delay or submit penalties under the provisions of Companies Act. But if done on this scheme, immunity is given. So, no statutory action can be taken against the companies for delayed filings.
Okay, very well. Thank you. There is one more question, if you allow me to ask.
Yes.
This is in regards to DMAT. Like when we said the promoters have to DMAT when they cross the definition, is it also applicable for investors, and who will guide investors? As you said, investors can hold their securities in physical format. But if they're willing to convert into DMAT, then who will like guide them? Like the company has a procedure. Is there a procedure schedule laid down or not?
In fact, a classic example of this is an AIF investor. In case of AIF investor, because of the rules applicable for them specifically, they are expected to mandatorily hold investments in DMAT mode. So it's a classic case of investor requesting or mandating for DMAT. At that time, what happens? Company definitely, because they need funds, they will go for optional ISIN. At that time, what will happen? No provisions of the Companies Act with respect to, in case compulsory DMAT was applicable to them, there are so many things which are applicable. Say, for example, new issue can happen only in DMAT. Promoters, all these restrictions will not be applicable because they are going optional. Voluntarily, they are going. Restrictions attached to the compulsory DMAT situation will not be applicable. Filing of PA6, all of that, it's not applicable for them because they're doing voluntary.
So we have another question by Miss Sarayu. She has written in the chat box that I have one company dormant status for 8 years, prior to which annual returns were not filed for 3 years. Annual returns are returns after dormancy status is being filed. IT are not filed though. Can we make use of new scheme for closure and strike off?
ITR definitely, whatever normal due dates, whatever is applicable, this scheme doesn't extend to ITR. It is restricted only to AOC4, NGT7 and ADT1. Whatever years you had not filed for 3 years, prior to dormancy, that definitely this scheme you can apply, and the fees will be nominal because it will be 10% only. You can take benefit out of this scheme, Sarayu, because you're referring to annual filing form. You're referring to not filing of annual filing form for a very earlier period, 8 years beyond. So 9, 10, 11th year earlier. Penalty could be, yes, minimum, but still you can use the scheme. It will be beneficial for you.
Yeah. Neeraj, for your question, the form can be filed with a clarification letter. Better to file 3 years, the previous years, and you can file for closure. Or without filing also, you can file for a closure with a clarification letter.
So we will be taking one last question. Sheetal has one query, whether this scheme is also applicable to LLP.
This particular companies compliance facilitation scheme is limited to companies only. So if you would like to close the LLP, normal methodology, if you want to file any forms with LLP, even though it belongs to prior years, normal fees is applicable.
I hope, Sheetal, this answers your query. Thank you, Sarayu, also for asking your query. Uh, with this, we are at the end of the first panel A, first speaker Shilpaji session on corporate changes expected in the next year. Shilpaji, you have been a proficient speaker all through. Everybody, I think everybody who's connected with compliances and CS and valuations or insolvency, they know you as a profound speaker, and you have been part of the FinTrack community for the last 1 year or so, and you have already taken a session back also. And we hope that we have the good fortune that you will be again taking up further sessions in FinTrack. I know you are in travels today and you have taken out time from your private busy schedule and joined this session. And I really, really thank you for that.
Thank you, Neeraj. And I thank FinTrack because this was a really session which I was looking forward to. The startups are now being judged by their compliances. Okay, it could be corporate law, it could be tax, indirect tax, FEMA, ODI, all of which is covered in today's session. And all us as professionals must make use of this session and update ourselves. Updating ourselves is always an asset for each of the professionals participating in this session. Thanks, Neeraj. Thanks, everyone.
Thank you, Shilpaji. Now, before we move on to our second speaker of the panel A, I would like to invite our industry partner Rohit Gupta of Ashwashan Advisors to speak on about Ashwashan, about FinTrack, and about the journey so far. Rohit.
Thank you, Neeraj. So Neeraj, you're inviting me after already Shilpaji and Harshdeep has already spoken, right? So I'm not sure how much justice I'm going to, speak when I start speaking about, FinTrack and you. But nevertheless, I'll start an introduction about myself. I'm a chartered accountant. We started Ashwashan Advisor with a simple objective of simplifying the finance, regulatory, compliance space in the startup space. Right. So after working for 13 years in corporate and startups, there was one clear need of, simplification of the services, which most of the CA firms were, which are most of the, old CA firms were, providing it in a very traditional kind of, way. So we thought, there's a need for innovation and there's a need for simplification of the services. That was the objective of starting Ashwashan. When I started Ashwashan, I got connected and deeply involved in FinTrack as well, along with Neeraj. Although I knew Neeraj from my old days, but when the idea of FinTrack came to me, I knew that it was a great idea because finance, regulatory, and compliance were topics which were neglected over ages, right, over years, right. No one took them seriously, and when a platform to share the knowledge of these topics came up with a objective of helping the community at large through generation of leads, I knew it's going to be a game changer, right? So wishing Neeraj and FinTrack and all the community members a very best of luck, and hope this kind of events take place very regularly and we are able to bring about a change in the ecosystem as a whole. Thank you Neeraj and FinTrack for bringing this up.
Thank you, Rohit, for being our industry partner in this event. Without partners like you, this type of events cannot happen. So thank you for supporting in the way you have supported for this event. Thank you.
My pleasure, Neeraj. My pleasure. Thank you.
Now, continuing with our panel A discussion, we move on to our next speaker, Mr. Jagrit Tenani, who will be joining us from Calcutta. Jagrit will be speaking on the changes expected in the SOPs of all the corporates and startups. And to introduce Mr. Jagrit, I would like to ask my co-moderator, Harshdeep. Harshdeep, over to you.
Thank you very much. Thanks to Jagrit ji for taking out your time and for upcoming knowledgeable session. Right now, I'm going through your profile. It is going to be a little long, I believe, and I can see there is a lot of things in it. And honestly, I thank you for everyone for your patience as well as the knowledge you all are bringing. So let's begin. With a dynamic career spanning over 7 years, CA Jagrit has emerged as a seasoned professional in the domains of risk-based audit, SOP formulation and implementation, internal audit, statutory audit, and GST. His unwavering dedication to excellence and a comprehensive skill set make him a valuable asset in the financial realm. He is also visiting faculty at ICI. His experience in the corporate audit department of ITC Limited encompassed him with a keen awareness of the critical role that stringent internal controls play in the risk-based environment that a company operates in. He's a qualified CA, chartered accountant, and a BCom honors graduate from Calcutta University. His in-depth understanding of GST regulations, coupled with his ability to navigate the intricacies of compliance and optimization, makes him a reliable advisor of business seeking to manage their GST regulations and obligations. Jagrit prowess in standard operation procedure, that is SOPs, formulation and implementation showcases his knack for enhancing operational efficiency. He is actively working on various automation using AI. Jagrit, this is very nice profile of you. I was being impressed while reading it. And honestly, I'm looking forward to the session. Earlier, the session when Shilpa ji was giving it, she was telling about the corporate compliances. Now we are coming to the tax part. This has to be the most knowledgeable session for this last financial year. So, Jagrit, over to you.
Thank you, Harshdeep ji, for such kind words. So, so basically, the agenda for today for me to speak upon will be to understand why internal controls are important and how can we formalize it. Basically, I'm just giving an overview. Is that SOP is nothing but a formalized way of communicating to the people inside the organization that how the things needs to be done, and it places the controls in such a manner so that even when the business person who the founders are not at their office and they are focusing on expanding the business, the other businesses of other functions of the business works properly. So I just start the presentation. If is the presentation right available with me?
Sorry to cut you in between. I believe, Jagrit ji, this is the topic everyone needs to listen to carefully, because we all as a professional, we all as chartered accountants, company secretaries, lawyers, professionals, miss out the SOP part in our day-to-day routine of our professional life. So looking forward to this.
So because the time is short, I won't go into the basic things and I'll just jump to the main part and to understand why internal controls are important. So as Shilpa ji had stated earlier that while she was explaining section 186, the companies after doing the transaction, then they ask what is the compliance part. Supposedly, if they're giving any loan to the directors, there are certain compliances that needs to be done. So that is the traditional approach where companies used to follow. After doing the transaction, then they will do the accounting entry, and then they will ask what are the compliances following it. But by the time the compliance portion comes, the time limit to do the compliance will itself pass away, and the company will have to face penalty or late fees and other non-compliances cost. So this is where the internal controls come. So basically the compliance needs to be treated as an end stage activity, and the process to understand it from where does it start needs to be inculcated at the start itself. And this should be done at the earlier stage of the business, so that when the business grows, there's no non-compliance. As we will be see, as Shilpa ji had correctly stated, these startups are nowadays being considered to be more compliant. Then revenue might be a bit here and there, but the cost of non-compliance which would come because of not following the rules and regulations would be very high. So we need to be very compliant in regards to the rules and regulation and to understand where we are wrong in it. So we need to understand what are the processes that can be automated, and we need to document those processes so that proper controls can be established and it can be converted into SOPs so that it can be followed rigorously. Definitely, there will be some exceptions which might occur that can be dealt at the point of time when such exceptions occur. And so, as I had mentioned that how the traditional practice actually work. We first do the transaction, then we'll be doing the accounting part, and then a review would be done, and at end the compliance filing happens. Rather, in the newer stage of business, the newer era in which we are dealing in, the process should be, first we should identify the process, we should embed the controls, we should ensure the ERP that we are following has the validation in itself, and then the automatically the compliances would be automated. So I'll give a very small example in for it. For example, every businesses will be deducting TDS. So supposedly if a professional is being paid, on that 10% TDS needs to be deducted. So this is the process at the time of service, at the time of engagement of the professional, a PO or SO is generated, a engagement letter is generated. At that point of time, when the PO has already been executed, that master in the ERP should be created by supposedly by the name of Interact Advisors will create an master. In that, while creating the master or ledger, as we can say, at that point of time only will ensure that the TDS rate is mentioned as 10%. So whenever any transaction will be recorded in the system will itself trigger that 10% TDS needs to be deducted even if you're not deducting it. And at that point of time, if you're not deducting TDS, the system will not allow you to record the transaction. So this is how the modern compliances is getting into. And once the system itself triggers the TDS entry point, your TDS compliance will be done automatically, because at the end of the month, you will get a report wherein you will have to pay the TDS amount. So what is the purpose of the internal controls? Internal control is very important because it will help you to protect the assets of the company. Over here, I'll give you an example. Supposedly, there's a laptop in a company which has very confidential data. So, if an employee needs to carry that asset away from the office, certain controls needs to be established so that the data is not leaked. There can be IT controls, there can be physical access controls as well, that by inserting the USB, the employee or the other members of the organization will not be able to copy the data. Whatever data exchange needs to be done, it should be done through network or mail itself. Secondly, we should ensure reliable reporting. Now, as I mentioned in my earlier slide, that we need to ensure that TDS compliances are done properly. For example, that I'm just taking TDS as most of us will be able to relate to it. So at the time of deducting the TDS, that reporting needs to be done on an automated basis. Suppose on 2nd of every month, following month, I get a report from the system itself, wherein I'll understand under which section I'll have to pay TDS. So it will ensure, the controls will ensure that the reports which is being generated is correct or not. Third is the operational efficiency. This is ultimately the end goal of the internal controls, because when the controls are established, then automatically things will get automated and your operational efficiency will automatically increase. So instead of doing manual calculation, instead of allotting some manual labor hours to it for calculation of TDS or GST, if those things are automated, a proper control is established, then automatically the operational efficiency will follow. And if my controls are proper, if the TDS deductions are proper, then automatically I'll be compliant. So how can we design the control? So for this, there are 5 parameters. We need to understand the environment. We need to assess the risk. We need to understand which are the activities that needs control, what kind of information and communication channel needs to be followed. And the 5th is monitoring. I'll come one by one. I'll discuss each of these 5 parameters one by one. First is the control environment. First, in this control environment, we need to understand what kind of organization we are working for. What is the organization structure? What is the business? What are the businesses of the company that the company is doing? How things are being followed? What kind of ERP is being used? So all these comes under the control environment, where we need to understand these are the basic things that needs to be covered while designing the internal control. Second is the risk assessment. And risk assessment is the most important out of all the 5 parameters. Risk assessment is nothing but it is basically what are the risk areas that a business uh, can understand from its business environment. Supposedly, IT is a very big as a risk area because it will almost all businesses are dependent on IT. Our data is stored on servers or cloud. We are doing our banking activities using IT. So basically, all the activities that is being done, whether financial or non-financial, is governed by IT. Even the SOP that will formulate will be kept on in some or the other way in our system, which is again a risk factor because if that SOP is leaked outside, then it will create an havoc because an intruder can understand what are the weaker spots in your organization and they can attack that area itself and can damage your business. Third is the control activities, which is again we can link it to risk because when we do the risk assessment, we understand this 5 parameters are the areas where which I think is risk is very high, having high risk, is moderate risk or less risky. So control activities will follow depending upon how are we assessing the risk. If we are considering a particular area to be very risky, will design the controls in such a manner so that multiple approvals are needed, which will help us to control any leakages in the business. Information and communication is nothing but how we are communicating within the business organization, whether we are following formal uh, communication or informal communication, whether the data being transferred is using WhatsApp or internal, say Teams or something, which is used by the organization as a whole and even outsiders. And then monitoring. After we have designed the controls, we need to regular monitor it. It shouldn't be that once the internal control has been established, you will stop monitoring it because the way dynamics are changes in the current era. Monitoring those areas is very important because any changes in the outside world, in the external world, will directly impact the control mechanism that has already been uh, implemented in your organization. There are 3 types of controls. One is preventive controls, one is detective controls, and the third one is the corrective controls. So when we design controls, what the primary aspect or primary objective is that the system or the controls that have been established is able to prevent any kind of error that will happen so that there's no question of any non-compliance. So as I had referred, a TDS calculation, supposedly if the calculation was being done manually, then instead of using 10% TDS rate, if 2% TDS rate would have been deducted. So controls needs to be designed in such a way that that error of 2% deducting 2% instead of 10% doesn't even occur. So if those kind of system, if the at the beginning itself, when the master is being created, at that time itself, the masters are reviewed in a proper fashion, then that error will not occur because at the time of master creation, will ensure that in the name of Fintrack advisors, 10% TDS needs to be deducted every time any service is being taken. Exceptional cases are always welcome because at times it might happen that some transaction doesn't require TDS, or if TDS is required, it might be required in another section or different rate might prevail. So these kind of system validation help us to prevent any error to be occurred. Second is a detective control. So supposedly at the time of what happened is that uh, suppose instead of debiting Fintrack advisors, the amount is correct. Jagrit Tenani was debited. So in our books of accounts, the financial position won't change because ultimately it will reflect the same set. It will provide us the same bank entry would be correct. the debtor creditor amount would be correct. Overall amount would be correct. But the ledger of Fintrack Advisor and Jagrat Irani won't be reconciling. So at that time, we'll have to ensure that we are taking the ledger confirmation from the parties, and we are doing the reconciliation at the year end or on a periodic basis, and to understand why such things had happened. Thirdly, the corrective control, that is the adjustment. Supposedly, instead of over here, as I mentioned, that supposedly even the detective controls were not in place, or it wasn't able to detect the error. Then at the time after when the error is being detected, then we'll pass an adjustment entry. That is the corrective control that we are taking by doing the adjustment by creating one account and debiting the account that had to be debited. So now I have spoken about internal controls a lot. Now I'll jump to what are SOPs. So SOP is nothing but a formal communication of the internal controls that have been established in the organization. And it is basically kind of a recipe that a person or a business in charge or a functional or a division in charge needs to follow. So basically, it has all the recipe. It will list down all the steps one by one. It will, while defining the steps, it will assign what kind of role, which person is responsible for which activity will already be predefined, and it will ensure what are the control checkpoints in it. And after that, what are the documentary evidences or documentary requirements that is needed to make the SOP. So, for example, control checkpoints is nothing in the entire SOP. I'll just give in a gist, I'll say SOP is made on SOP and internal controls both are made on the basis of segregation of duty, and this is a base framework to ensure a proper control is being established in the company, and SOPs are formulated according to it. So this is a compliance automation framework, and I'll give another example as well. Like when we are onboarding a new vendor, that is not something which is coming from a compliance point of view, but from SOP point of view or internal control point of view, it is a very important step, because when we need to understand on how are we onboarding the vendors. Is it on the basis of any formal engagement, whether terms and conditions are properly defined? It might happen that I'm taking an example. Supposedly Neeraj ji and I have been knowing each other for quite a long time. But when it comes to business, we need to understand that our personal relation is important. But if we are into business, we need to ensure that things are documented properly. It shouldn't happen that the terms and conditions between Neeraj ji and me are not aligned, are in line with the business objective of ours. Everything should be properly documented, and it should be as per our business norms.
Jagratji, we have a time constraint here.
So I'll just take five more minutes and I'll wrap up.
Sure.
So what are the control failures that we need to address in our SOP? Many a times the controls are overridden because of the management itself doesn't want controls to be proper, or they advise us to do the things in a undefined manner. Documentations are not proper, and SOD, as I mentioned earlier, SOD is something, maker checker control is not there, and monitoring is not happening, because monitoring is something which is very necessary, and we should ensure that monitoring is done on a periodic basis so that any incorrections or any wrongdoings can be identified at earlier stage for future, so that in future it doesn't reoccur again. So this is the implementation roadmap, after which I'll wind up the session of mine. So we need to ensure a diagnostic review. We should do a thorough risk assessment, basis which will design the controls, and then we'll formulate the SOPs in it. Then we'll properly document it. And after we are done formulating the SOP, how can we integrate using the ERP and other technologies in the market? And then after that, once everything is done, we'll have to monitor it on a periodic basis. So key takeaways from the session is compliance should be process driven. SOP should be operational so that internal controls are operational. Automation through tech is something which is very important for better efficiency in the business, and it will ultimately lead to a strong governance which will improve sustainability. So thank you, Neeraj ji.
Thank you, Jagreet ji. Your take on SOP is always so refreshing because as CA professionals, we are always mostly talking on compliances part. But SOP is something that we can always implement for the client as well as our own internal teams. And just pointing out, there was I was in one professional group and people were saying that now a lot of these viruses are now targeting CACS firms in India. Because CA firm, we don't have protocols, internet cyber protocols and all. So SOPs are something, it is just not purely from the client perspective, it is also from our perspective.
Correct. So in this, I'll just like to highlight a new act, DPDP Act is also under process, and once it is implemented, then there will be a huge burden on we professionals as well to understand how to ensure the data of our clients are protected in a diligent manner.
Yes. So I'm opening the floor for any Q&A. Anybody has any questions, they can unmute themselves and ask directly, or they can write in the chat box.
Yeah, so Jagrat by this side, Lekha Agarwal. I have one question.
Yes.
जस्ट एक क्वेश्चन है कि हम एसओपी तो बहुत बना लेते हैं बट इम्प्लीमेंटेशन में हमेशा एग्जीक्यूशन में हमें बहुत प्रॉब्लम आती है मतलब एज ए कंसल्टेंट मैंने बहुत सारे क्लाइंट्स को देखा है कि दे आर प्रिपेयरिंग द एसओपीज एंड फिर उनका टॉप लेवल मैनेजमेंट ही उस पर काम नहीं कर पाता तो हाउ टू ओवरकम दिस काइंड ऑफ फेल्योर्स बेसिकली उस चीज के लिए क्या सॉल्यूशन?
सर मैं इसमें एक चीज ये बोलूंगा, आई pardon me if I'm using any wrong words, ये सब जनरली ना जो अपने बोलते हैं ना बाबू कंपनी या लाला कंपनी टाइप्स में होते हैं, उनमें वहां पे प्रॉब्लम क्या होता है, टॉप मैनेजमेंट से ही वो आता नहीं, वो बना लेते हैं बट उनको पता है कि वो जब वो उसको यूज करने जाएंगे ना तो उनको बहुत सारी चीजें में थोड़ा डिलेड डिसीजन हो सकता है कि जो काम करने में उनको एक दिन लगे उसे हो सकता है कि वो 1.5 days में वो काम हो. But at the same time, उनको ये चीज will have to explain it as professionals that if they are seeing everything by bits and every small little things is being pardoned upon by them, pounded by them, then they will not be able to expand. उनको ये चीज समझना जरूरी रहेगा कि कुछ चीज उनको डेलीगेट करना पड़ेगा ताकि वो दूसरे इंपॉर्टेंट एरियाज में फोकस करके वहां पे एक्सपेंशन लेके रेवेन्यू का ग्रोथ होगा तो ऑटोमेटिकली ये सब छोटी लीकेजेस जो है उससे फर्क नहीं पड़ेगा. और एसओपी बनाया इसलिए जाएगा कि वो छोटी लीकेजेस बड़ी लीकेजेस नहीं हो और छोटी लीकेजेस अपने एंड से प्रिवेंट हो जाए.
डेफिनेटली थैंक यू. बट वही होता है ना प्रैक्टिकल लाइफ में, जैसे मतलब मैं जस्ट एक प्रैक्टिकल एग्जांपल देता हूँ कि डायरेक्टर एंड उनके प्रमोटर्स के कुछ जस्ट लाइक ऑफ पर्सनल नेचर एक्सपेंडिचर होते हैं. हम उसको उसके लिए एसओपी होती है कि इसका ये कैपिंग होगा, उसका ये कैपिंग होगा, अगर ट्रैवल एक्सपेंसेस फॉर द बिजनेस पर्पस है तो ही हम उसको इंटर करते हैं. बट समटाइम्स क्या होता है कि एसओपी के बियॉन्ड जाके हम जो पर्सनल ट्रैवल के एक्सपेंसेस होते हैं उसको भी कॉर्पोरेट में कैपिटलाइज कर लेते हैं या बुक अकाउंट्स को कर लेते हैं. तो वो एसओपीज मतलब वो और that will turn into a major chunk basically. तो वो बहुत बड़ा चेंजेस हो जाता है. तो वो चीजें भी ओवरकम करने के लिए बेसिक मैनेजमेंट को ही सोचना पड़ेगा उन चीजों के लिए.
सर ये सारी चीजें ना टॉप टू डाउन लेवल अप्रोच फॉलो करेगी. जो अपने बोलते हैं टॉप डाउन अप्रोच एंड बॉटम अप अप्रोच, ये टॉप डाउन अप्रोच है. अगर हमारे टॉप मैनेजमेंट्स ही नहीं चाहते तो अपने लोअर मैनेजमेंट में ये सब बना के इट विल बी यूजलेस. मतलब एट दैट पॉइंट ऑफ टाइम आई से कि अपने को उनको बोल देना चाहिए कि पैसे मत खर्च करो.
बिल्कुल एग्री. थैंक यू सो मच.
Thank you Jagreet ji. Wonderful session. SOP implementation always brings about something refreshing for everybody, because as I told earlier also that compliance we talk about a lot but we don't talk about SOP implementation. And you are one of the few professionals who I've seen from the very first day. You have been very thorough with the SOP implementations in the organizations.
Definitely. And the way the AI is also developing now these days, we can easily make tools to automate the recurring compliances part, and which will automate and where human intervention will be very less. So the errors would be very, very less.
Thank you, Jagrit. Thank you.
Thank you, Neeraj ji.
Before we move on to our third speaker of the day, I would like to invite our partner, our tech partner, AlgoCube, Tapas Mishra from AlgoCube, to speak on what he thinks about the FinTrack platform, how AlgoCube is helping startups. Tapas, first of all, thank you for being a part of FinTrack. You have been a tech partner for FinTrack for some time now, and thank you for organizing and helping us with all the structure of this event. Please. Tapas, you are on mute.
Oh, I'm really sorry. Yeah, thanks, Neeraj. Thanks for your kind words, and thanks everyone. I'm listening to you. I mean, few of the things I can understand, and few is still over my head. But because I'm running a startup and I know how messy it is from a non-financial person perspective, because I am bothering every other day, be it Neeraj or anyone else, very small queries. But sessions like this will definitely help us who is running a startup, and people like us who are who will get everything in one webinar session. Definitely it's helping, and I know it's adding you guys a lot of value, but for us also it's a very good session. And now I won't take much time. I'll just keep it in 2 to 3 minutes. So I'll just split this discussion into two parts. So one is how FinTrack is helping us and other professionals. And the other part is what Neeraj mentioned, how AlgoCube is, helping individuals and professionals. So, I have been seeing Neeraj and FinTrack doing a fantastic job since last couple of years. So, it's a very good aggregator platform, and I'd say little tech savvy platform where people like me who can come and find all the professional at one place. So it's not like me, couple of my friends who run startups, they also find it very, very relevant, because all the informations and all the professionals they want to engage with, they're in the same platform. And I know Neeraj and his plan, it's going to be very technically advanced platform where everyone will be the contributors or be the visitors. Everyone will get a bit of knowledge from it. So yeah, we are growing along with Neeraj, and I know FinTrack is by next webinar we would be much more I'd say better platform than what we are now. So all the best, Neeraj, and all the best everyone. And then I'll just quickly go through what AlgoCube is doing. We are a Pune and Bhubaneswar based IT company. We are into app development and a lot of AI work we are doing, and we are into websites and application developments. And we are working with a lot of CA firms and individuals, creating their portfolio, creating their websites, and helping them reach out to their clients. Not in terms of just a visibility, but in terms of enabling their clients to understand. So for that, we are launching an application which is called Smart AI Agent. I won't take more than 60 seconds. I'll just share how it works. Okay, so this is an individual AI agent. So everyone can have their own AI agent trained with their data. So for an example, I am showing Neeraj's profile. So this is an AI agent for Neeraj. Neeraj can have this chatbot in his signature, in his website, or can be a QR code. So let's say I can ask any question. Let's say, what are your services? So it's trained with Neeraj's data. This is still developing, so there may be some here and there hallucination would be there. But yeah, let's say I am an AI assistant providing. Okay. I want to evaluate my US. Let's see how it works. So to evaluate, so let's say Neeraj is not available. this is the chatbot where people can ask and, ask these queries to evaluate US entity. So it is giving all those answers, right? Would you look to deeper into any of these valuation methods? Let's say I want to ask, market approach or asset approach. Let's say, what is asset approach? So this is being trained with only Neeraj data. It's not like it's getting from anyone else. What Neeraj has trained. So, this is coming. This asset approach values intangible assets. So basically what we are doing here, we are not giving a lot of information because that will confuse the person who is reading. We are just giving very minimal information saying that Neeraj and anyone who would be using it, their firm is capable of it. Let's say I'm saying, I want to connect. So it will give me a form. Okay, so here I'll put, let's say, email ID t@p.com and then phone number 1234, company name, message. So I'll just put this. This is basically a lead. Okay, submit and continue chat. The moment I'll put this, all these details should come. It says that, thank you for your interest. I have received your contact information, and the user can still, go and, discuss these things. So this is this is in the development. Maybe next 15 days we would be releasing it. Just, to let you know that, this we would be launching this to empower the financial professionals. Hope, this helped you. I won't take much time. Yeah. So, this is one of the areas where we are helping, those professionals, but there are other areas like just Jagriti mentioned about DPDP compliance. So this is coming in a very big way. So we are also working a lot in the DPDP compliance. So yes, we are doing a lot for the finance professionals, and we are doing a lot of technical stuff for FinTrack. And thank you for joining this session and enlightening everyone. I'll be in the call and I'll hear you out, guys. Thank you. Thanks, Neeraj, for this opportunity. I'll share this link where you can share your interest for this tool. Then we'll get back to you in next 2 weeks once it is ready. Thank you.
Thank you, Tapas. Thank you. So now we move on to our third speaker of the day of panel A, Mr. Lekhak Agarwal, joining us all from Jaipur. So just before he starts, I would like to say that we are a pan-India basis because our first speaker was from Bangalore, the second one was Kolkata, now from south to east and then to west, from Rajasthan, from Jaipur, Mr. Lekhak Agarwal is joining. I would like to ask Mr. Harjeet Narua, who is joining from North India, to introduce Mr. Lekhak Agarwal. Thank you.
Welcome, West India, western part of India. So I would, first of all, before starting the introduction of Lekhakji, I would like to say that every group has a prominent personality, only one prominent personality, and every group has that one person who has a lot of connections, and that is Lekhakji. The messages you send, like, you are very proactive. You are bringing the FinTrack community to social media as well as the print media. And this is actually a win-win situation for us, because when we see, if everyone doesn't know that Lekhakji has used his connections or used his influence, now we are also part of print media. We have been published there, the FinTrack community. So thank you, Lekhakji, for that. Let's begin your introduction. Lekhak Agarwal, a native of Rajasthan, Ajmer, Rajasthan, is a distinguished professional known for multi-faceted expertise in finance, education, and strategic advisory. He is a qualified company secretary and a cost and management accountant. He holds postgraduate degree in accountancy and business studies and a business administration, alongside multiple international diplomas from Germany and a certification in strategic management from London, UK. So tell me that how did you manage to do so many things? We have done only 1 or 2 things or 3 things to the max. That's very, very brilliant of you. And honestly, I believe, how did you manage? Please, after this session, tell me personally this thing.
Yeah, definitely, definitely. I am learning from the leaders of the industry only, just like नीरज जी, जो कि वो भी मैनेज करते ही ये सारी चीजें. एंड अभी भी मैं बता देता हूँ कि आई एम नॉट इन जयपुर. आई yesterday suddenly नाइट में प्रोग्राम बन गया खाटू श्याम जी का. So I went there, I visit there, and वहाँ प्रेयर करके, and I am using a library where I am sitting and addressing the session.
बहुत अच्छी बात है जी, very well.
Thank you so much, Neeraj sir, for creating such a wonderful platform for all of us as a professional member of the team, and definitely would love to go for a very long way. And thank you so much, Harshdeep Bhai, for a wonderful introduction. So, as Harsh Bhai ने introduction दिया कि मैं एक international business development and strategic business development profile lead कर रहा हूँ. So, I am just addressing couple of points. Basically, I am working as an international strategic business developer for the I am an individual who helps the companies like companies or corporates in India to expand their global footprints across the globe. So I am my major countries I am working with US, UK, Australia, Canada, some countries of Europe, Middle East, Hong Kong, Singapore, Malaysia, Dubai, Thailand, Sri Lanka, like countries. So in this where the company needs to we are doing the pre-business setup advisory just like कि किसी भी कंपनी को अगर ओवरसीज में एक्सपांशन करना है तो कौन सी कंट्री में करना है तो we are providing the pre-business setup advisory either in the service sector or they are into the manufacturing sector. So we do custom advisory as well. See what kind of tariffs will be applicable if you are doing some kind of manufacturing activities in and trading in those kind of products attracts the tariff. So I selected most favored countries, just like one is USA and second is Singapore in my today's session. So due to time constraint, I'm not much taking time, but I'm just going to start my session. As you know that the daily we can say that Trump tariffs are affecting the global exports across the globe, including India as well. So major regulatory changes which are going to be implemented in from the next financial year 26-27. So there is provision is that there will be 10% tariff which is the which is implemented as per the section 122 of the Trade Act 1974. Apart from that, there would be some enforcement on the counter purchasing. Just like if you are purchasing from the Russia and Iran, there would be the 25% additional duty you need to pay on the such imports in the United States of America. Apart from that, US is going to use the AI infrastructure as of now. अभी तक उनका compliance part बहुत मतलब आप lenient समझ सकते थे कि मतलब वो आप leniency काफी सारी मिलती थी. But from now onwards, for the next financial year, US is going to implement lots of provisions, just like they are going to start the US LPA enforcement schemes. जो कि यूएस कस्टम एंड बॉर्डर प्रोटेक्शन में कंटिन्यूस करता है कि हायर heighten the securities in the supply chain and that will increase the shipments and solar sectors basically उस पर focus. If you heard the news day before yesterday on 11th, so there is a new section came into the force that is section 301 who delegates that if any of the 16 countries they have selected, if they are exporting to the United States of America, the United States of America will evaluate their excess production, including their production capacity, excess production capacity as well. They will review their cost, government policies, they will their cost, their subsidies that provided by their all the 16 members, 16 countries they have selected, their labor cost, including the other benefits if their local government is provided for the purpose of the export. Since I am closely working with the US Department of Commerce and having the recent US Department of Commerce, European Union as an international uh, trade law person, so we have recently one case of the EEPC from the Engineering Export Council of which is only in the Kolkata itself. So we have found the case of the casting iron, and we got the termination of that case by proving that the initiation was wrong, the data was absolutely correct. We didn't have done any kind of dumping on the exports from India. So these kind of achievements we have on our portfolio. Apart from that, US is going to US is from the next financial year, US is going to control its import and national security. So they have implemented the BIS 50% rules, which is expected to be came into May 26 for the purpose of restructuring their supply chains to meet their requirement. Then they are using the AI and semiconductor export controls. उसमें क्या करेंगे ये लोग कि जो सेमीकंडक्टर्स जस्ट लाइक जो एक्सपोर्ट हो रहा है अक्रॉस द ग्लोब से यूएस को, तो उसको रिप्लेस करेंगे लोकल बोर्ड लाइसेंस, बोर्ड लोकल कंट्री, लोकल जो कंपनीज है उनको लाइसेंस देके, एंड उससे केस बाय केस अप्रूवल में भी उनको मैंडेटरी कर देंगे कि अगर आपको सेमीकंडक्टर यूज करना है यूएसए में, एक्सपोर्ट करना है, मतलब किसी भी कंट्री को, यूएसए की कोई कंपनी इंपोर्ट करना चाह रही हो, तो दे विल provide the consent to they will mandatory to require approval for the purpose of import and export as well. Apart from that, they are also going to implement some of the financial and data compliances, just like they are going to mid 2026 में, मतलब मई और जून में अभी वो ट्रेजरी क्लियरिंग रूल्स भी लेकर आ रहे हैं. ट्रेजरी क्लियरिंग रूल्स पहले थे बट इनिशियली इम्प्लीमेंट हुए, एंड उसके बाद में जो अब उसका एडवांस वर्जन जो एसईसी लेकर आ रहा है, रिगार्डिंग दैट दे विल ऑल द कंपनीज मस्ट बी प्रॉपरली कंप्लायंस. जैसा कि मैम ने बताया था, शिल्पा मैम ने, कि कंप्लायंस पार्ट इज मोस्ट क्रिटिकल पार्ट ऑफ एनी ऑर्गेनाइजेशन. So in same order, US is now going to follow that कैश ट्रांजेक्शन. उसका भी अब कैश ट्रांजेक्शन पर बहुत ज्यादा फोकस है कि अगर कैश ट्रांजेक्शन अगर कोई कंपनी कर रही है तो दे विल टेक केयर ऑफ दैट. एंड अभी तक यूएसए में बहुत सारे कैश ट्रांजेक्शन हुए थे, बट दे आर गोइंग टू बेस्ड ऑन द ई मोड एंड एआई मोड. देन उसके अलावा एक नया प्रोविजन लेके आए हैं वो लोग, फिनसेन रेजिडेंशियल रियल एस्टेट रिपोर्टिंग का. इसमें अभी तक जैसा मैंने बताया कि कैश दे आर डीलिंग इनटू द कैश सेगमेंट्स इन लॉट्स ऑफ they are taking the cash as a part of purchase or sales of the properties, and so now they have restricted their things from 1st of March most likely, जो कि already जा चुकी है. तो 1st of March से they have implemented their FinCEN residential real estate reporting, in which if you are buying any kind of asset in the cash, you must have certain compliances that must be followed, and you also have to make certain reportings as well. Apart from that, they are going to take the Cyber Security Act, which is CERCIA basically. So CERCIA will be implemented in from the May 2026 in USA, which the purpose of implementing the CERCIA is just to protect the cyber crimes across the globe, across the USA, and for ransomware payments within the 24 hours for the critical infrastructure. Apart from that, they have shifted, the United States has shifted now from the regulatory trends and priorities. So they have shifted from the addressable to mandatory. Because अभी यूएसए में क्या होता है कि बहुत सारी चीजों को एग्जेम्पशंस है, बहुत सारी चीजें एड्रेसेबल है, बट नॉट द मैंडेटरी. बट दे आर गोइंग टू डू लॉट्स ऑफ थिंग्स मैंडेटरी फ्रॉम द up till itself financial year, and that would be the AI based governance. Apart from that, they introduced AML and financial crimes a couple of years back, but now they have redeveloped that just like अभी बोला था कि SOP changes होनी चाहिए, तो definitely SOP got changes, and AML and financial जो crime policies है यूएस ने उसको रिव्यू करके and अपडेट किया है. That is also going to be implemented from the April. One of that investment advisor mandate, which is already effective from 1st of January 2026, but real-time screening, beneficial ownership transfer, transparency, foreign entity disclosures, virtual assets oversights, and would be there different kind of things which would be mandatory reporting, and that their reporting criteria would be enhanced as compared to the previous. Apart from that, there are false claim act, जो कि उन्होंने recently develop किया है. false claim act है. Department of Justice is increasing using the FCA to pursue the importers of tariff evasion and undervaluation of the goods. Sometimes what happens that the entities are providing the export in the cheaper price in the US market. So that is harm the US local industries. So for the purpose of that, they have implemented that act, FCA. So that will also govern, and that will also help them to analyze the for the pricing comparison, for the analysis of the cost, for the sales volume, sales database. They will evaluate all the things and then they will post analysis of that, they will regulate the tariffs in the different kind of manners. As I told you that on the 13th, 11th of the March, they have introduced the section 301. So section 301 में जब वो access in capacity, access production का करेंगे, तो इंडिया के जो exporters हैं, जो कि इलेक्ट्रिक इंडस्ट्री में है, केमिकल इंडस्ट्रीज में है, मशीनरी में है, स्टील में है, ऑटोमोबाइल्स में है, बैटरी इंडस्ट्रीज में है, सेमीकंडक्टर्स में है, they will definitely going to affect because US is not US is not supposed to be one who is going to analyze our production capacity, our excess production, which we are going to do for the purpose of the export. But they have introduced that, so they may ask for any kind of data if you wish to export the goods from India and selected 16 countries to the United States of America. Then these are the major changes which are either ongoing or maybe implemented from the next financial year and mid of the 2026. So now we will have to forward for the Singapore locations. So what are the technical changes in the Singapore? Because they have changes that they have made some changes in the international taxes, international taxation policies, principles, and rules and regulations for the compliance manner, and they have started the digital compliances because in previous years what happened that they are also their mechanism is also based on the physical submission of the documentation, physical payments of the taxations matters. So now they are also going for the digitalization, and they have effected that from the 1st January itself. Then GST, there are some changes in the GST, which is going to be start from the 1st of April 2026. That all the new voluntary GST registration which the corporates are going to take, either they will they will have the LLP structure, sole proprietorship, partnership. They must adopt the invoice now. That is known as people network. That they will use only the people network. Only through that they can apply for the GST registration. Then there is some OCED pillar of 2 implementation. So they will, for the purpose of the global and anti-based evasion, globe rules and domestic top-up tax (DDT) for multinational enterprises groups, ensuring a minimum effective rate of 15%. जो कि अभी तक implemented नहीं थी, they have implemented that as well. Then in corporate and employment regulations, they have made certain changes, just like they have increased their local qualified salary from the 1600 per month from 1800 SGD per month, which will be going to effect from the 1st of July 2026. Then till date, the filing with the ACRA are certain limit that was digitalized, but from July onwards, that will be almost all the forms would be the file on the in the digital mode, not in the physical mode. So ACRA is continued to enforce and case analysis and electronic finance requirement for the annual return and financial statements via their BizFinance website. Apart from that, they have made one major correction in the major changes in the nominee director disclosure tab. Companies that appoint the nominee director or nominee shareholder must now disclose their nominee status to ACRA. अभी तक ये ACRA को disclosure करना requirement नहीं था, but they have made it mandatory for the company's business profile, and that would definitely going to be displayed in the company's business profile. So that is another one changes. Then there are strong shareholder protection. They have introduced 2-tier bill approval from the framework for the selective off-market share buyback, where a company proposed to acquire only some shares within a class, because we know that there are different kinds of class for the shares. So for the protection of the shareholders, and because there are some instances where people have made the fraud in the acquisition of the shares, which recently happened for almost 2 million SGD. So that would be the benchmark case for the Singapore government, and they have taken the action on the basis of that, and they provide a strong shareholder protection for that purpose. Apart from that, they have increased the director accountability. So, as we all know that directors are highly responsible and penalties under they have introduced some of the penalties under the new framework as well. So, maximum penalty under the section 157 of the Companies Act has been increased to Singapore dollar 20,000, and imprisonment provision is also has been introduced for up to for the 12 months period, or they can provide the both to the director, because directors are expected to exercise responsible care, skills and due diligence, and different kind of we can say that proper mechanism has been maintained by the director and top level management. So in order to that, they have increased the director responsibilities along with their accountabilities. So these kind of changes have been incurred from the perspective of the Singapore and USA. Apart from that, there are certain provisions which we have the India EU FTA trade deals, which is also going to be affect India EU trade relations. So that would be win-win situation for us as a business partner of EU and specifically the EU countries. So Germany would be the biggest game changer for that as a world largest third economy as of now. So that would also going to be affect in the India exports, but the US export US import will definitely affected by the tariffs and provisions made by the Donald Trump on a regular basis, until and unless there would be just like the Supreme Court has provided its decision that the IEEPA जो tariff उन्होंने implement किया था, that is basically refund करना पड़ेगा. So as a result of that, they would have to refund the $88 million for the towards the export done by the different countries. But still, there are some uncertainties that they will he exercise the another power which is he as a president. So that is also going to be checked, and we have to make certain proactive actions. We have to take some proactive actions while dealing with the US as of now for next couple of months. So this is something brief for the US and Singapore from my side. Thank you so much, Neeraj, and thank you so much everyone for listening to it.
Thank you, Lekha ji. So this is an interesting area of our conversation, because as it is, every day we are hearing some new news. So what beholds for the upcoming term as compliances for US is a very interesting area, and I think this is a type of area in which we can have a 2 hours more discussion and still it will not be over, because every day some new things are coming up. So I'm opening the floor for Q&A. Anybody has any question regarding Singapore or US compliances or what are the changes, they can ask the speaker right now. So one thing, Lekha ji, I also wanted to ask that whether US is doing anything to encourage Indian investment in the US now. So we take measures for US investment in India, but vice versa also things can happen.
No, sir. As of now, because we are regular in touch with the Russia for the purpose of that effect, they are regulatory in that kind of manner. So they are, as per my understanding, they are not going to open some relaxation for the India for upcoming 2 to 3 months minimum. As per the yesterday update, they have allowed us to import the oil from the Russia and for the purpose of the home consumption. And just now, I just got a news that the Iran is also going to open the bridgeway for the purpose of the export purpose, except the Israel and US. So that is also another big news for us. For this is just half an hour back news only. So that would be that would make an effect definitely. But for the purpose of US, there would be we have to wait for the next 2 to 3 months, because the deadline for the tariff of the 25%, which he has the Supreme Court has been denied about that, is 15th of July. The due date is the 15th of July 2026. So before that, in that period, we have to check because we have made the applications prior to the court decision because we were definitely sure that in the US Supreme Court we have applied to our counterparts for our clients for the purpose of taking the tariff and duties uh, uh, refunds. Basically, we have already done for that our couple of clients. So we are of opinion that we have to wait for another 2 to 3 months to solve the global situation between the India, Russia, India, European countries, and India and US. So that is my opinion.
Thank you, Rekhaji. As usual, on point and totally on with the inputs. Anybody has any question regarding US or Singapore changes, compliances? If no, then we can move on to our next element. I think, Rekhaji, you were so clear that this has no query.
Thank you, sir. Sometimes ऐसा भी होता है कि it's सब कुछ समझ में आ गया या either over the head. So might be this is the niche area which I am practicing since last couple of more than 5 years. So this would be definitely going to cause a new area for lots of our professional colleagues.
Thank you. Thank you, Rekhaji.
Thank you, sir.
Now, just like Mr. Trump has so many surprises for all of us, almost daily we hear some surprising news. We at Fintrack also believe that there should be some surprise element. And for that, we have managed to bring in a former ICICI Bangalore chapter chairman, Mr. Venkata Subba Rao, as the fourth speaker. So as you people may know that he was not there in our earlier flyer because we wanted to keep this as a surprise for the participants because his expertise in CS and IBC matters are unparalleled. And I'm very happy to introduce Mr. Subba Rao. Mr. Subba Rao is a commerce graduate from Nagarjuna University and a fellow member of ICSI. He holds LLB from Nagarjuna University and MBA from Pondicherry University. He is also a certified insolvency professional and a registered valuer in the category of SFA. He was previously served as a chairman of the ICSI Bangalore chapter. Mr. Subba Rao has 23 years of professional experience in company secretary and financial advisory practice, and he joins us from Bangalore. So again, we are from West. We are now moving to South of India. Sir, thank you for accepting our proposal, accepting our invite to join as a surprise element. And I really, really believe that your inputs will be a very enlightening experience for all the participants.
Thank you. Thank you, Neeraj, for a wonderful opportunity to share a bit of knowledge as a surprise. Just I would like to discuss about Insolvency and Bankruptcy Code 2015. As you know that it is a 10-year-old law, but still, the whatever the professionals, still they need to get a lot of experience in this because the day-to-day many changes are coming, especially in the IBC. And see, we are talking about compliances for the companies, whereas as a sudden, sometimes they get insolvency notices. That also as a professional, even the client will come back to us and ask about, see, I got a notice from NCLT regarding about NCLT, there is a due for them or otherwise where the company has to pay to us and the company is going under insolvency. Now what we have to do because there is a big amount, that we need to have that experience and good knowledge. It will benefit always to the clients. Like as you know that we have section 7 under IPC where the financial creditor can file a case on IPC, can file case before NCLT to get that amount, to send the company under insolvency. And section 9 we have where operational creditor can file. In the both cases where we need to, the minimum threshold is 1 crore. If the minimum 1 crore due is there, then we can file case on a company. And as you know that, 60 to 70% cases are settlement stage only it is happening. The company is not going to insolvency. And as a professional, we can advise to the clients if there is a due more than 1 crore with the interest. There we can get the amount because recently we have seen one case, the rent they have to get almost 60 to 70 lakhs. With interest, it is crossing 1 crore. Then we have filed a case on the company, then immediately they paid. The same thing if you go to civil court, it will take 2 years. Even they don't care of. And also if you go to the civil court, if you have to pay 7% of on the amount on the 1 crore. Here in the NCLT, the beauty of NCLT is they will settle the matter within 2 to 3 months. If they are not going to pay, they will send to insolvency. If cash rich company, definitely they will come to settlement. Where we, as a professional, we can advise us to our clients. Okay, they can use the Section 7 or 9 application for like settling the amount. Even if our company is not able to, okay, we are discussing about startups. Many startups, okay, they are raising money and okay, the idea is going to be failure. Then okay, we have to give the fresh start to the directors. Then in that cases, we can go for Section 10. The corporate person itself can file insolvency and they can come out of that and they can lead. The directors can lead their own life. Even we have seen like few companies, few tech companies where we have filed Section 10 companies. Now the directors are working in US, Aramse, like without any other problems like PF, ESI or this company loan. Yes, maybe it is a like, okay, and a social stigma. It is a, they think that we are going for insolvency, but they'll get the new start. Okay, they can lead the new life with the insolvency. Sometimes even we can suggest to our clients, okay, to go for Section 10 application if the company is not going to pay. And even many amendments coming in personal guarantee. As you know that when the directors are going, the company is going for a loan, the director has to give personal guarantee. In those cases also, like, okay, as a professional, we can advise to our clients that don't give personal guarantees. Because now the banks, what they are doing, they are not going to file on the company insolvency. They are going to file directly on the personal guarantor like directors. Unless it is unavoidable, better not to give the personal guarantee. We can advise to our directors, especially the startup directors, don't give any personal guarantees because the banks know that we are not going to get anything from the company. They are going to file cases on the personal guarantors and they are going to get. Even the Supreme Court has decided that you need not to go on the company. You can file a case on the personal guarantor directly. And even some banks, what they are doing, they are filing simultaneously on the personal guarantors and on the company. And this is the one area where we can suggest our startup companies, okay, not go for a personal guarantee unless it is a mandatory. And again, we can advise, okay, in IBC, NESL, the National E-Governance Services Limited, where our clients are going to provide services more than 1 crore. Then we can register with the National E-Governance Services Limited and we can get the acknowledgement from other company. This is no one is using, like most of the companies are not using. And when you go for any insolvency or any civil matter, they will ask the first question about did you register with the National E-Governance Services Limited about your services. Then if you register, then okay, the acknowledgement is there and you don't have any burden of proof that because he has already acknowledged that, okay, where we can give the suggestion on NECL. And also like nowadays the cash rich companies where they are not doing any business, just they are leaving like that. Even we can suggest to our clients, okay, voluntary liquidation, where the company is having like 1 crore, 2 crores, 3 crores, but they are not doing any business. And this is the best idea, saying that we can close the company by going for voluntary liquidation, and the amount will come within 60 to 90 days by sending the company to voluntary liquidation. And you won't be having any like future non-compliances also. If you go for strike off, what happens? Okay, like you don't know whether any ESI or any PF dues are there. But yes, strike off you can go for, okay, when the company balance sheet is zero. But when the company balance sheet is not zero, then you can go for voluntary liquidation and IBC. And the NCLT also is closing these type of companies within 3 to 4 months. And it is the best utilization of the money also for the companies. And one more thing is NCLT practice. As a professional, again, I recommend, I can urge all the professionals to do NCLT practice for mergers and all. This is the best one. And if you're being a like insolvency professional, or if you have knowledge of insolvency professional, you can provide the resolution plans. Where, okay, many companies or many clients are looking for CRP companies like corporate insolvency resolution process companies, where they'll get assets less than for 50%. where we can help our clients to prepare resolution plans and to help them and to buy these companies. That is a one, okay, in IPC, there is a most advantages, and also like now new valuation report amendments also coming under IPC, like where you are going to appoint as a registered valuer for a corporate insolvency resolution process company, then you need to give the valuation for corporate debtor. Previously, we used to give that only for assets valuation like trade receivables, loans and advances, cash, inventory, then any prepaid expenditure. But now the what you call scope is increasing. We need to give that corporate data like enterprise value also we have to give. Then we need to take care of as a registered valuer, because most of the our FinTrack people are registered valuers also. Okay, and these are the new like okay amendments in IBC, and okay like best utilization by our professionals to guide to them, and it is advantageous also, because as a strategist like a CA, CS or CMA, we talk about compliances. At the same time, we can discuss about these matters, like maybe it is more than compliance, maybe like you have any companies which are not working, or okay cash rich companies, even sometimes like mergers. Previously what they do, like okay like there are companies which they are not working, they used to go for merger. Then what happens, okay, you need to go for NCLT, it will take again almost 3 to 4 years, or sometimes 2 years also it will take for merger. But right now what we can do, instead of going for merger, you can go for voluntary liquidation, that you can close the company, you can get the money. You need not to, because like you have 5 to 6 companies, they say that, sir, why you are doing merger? They will say that we want to reduce the compliance burden, that's why we are merging. Instead of merger, they can go for strike off. If the company is not having any money, if the company is having money, then they can go for voluntary liquidation, where you can suggest under IBC. Yeah, these are the few updates I would like to give. Neeraj, thank you very much for giving an opportunity.
It's always a pleasure to have you on board, sir. Anybody has any query regarding IBC proposals in the upcoming year? Our keynote speaker has something to ask, sir. Please.
Yes.
Yeah. Okay. Thank you, Mr. Venkatasamara. That was really informative. You know, I've seen this very often. A lot of the companies that are in IBC, the one aspect that nobody really speaks about is what happens to the employees. You know, so there are a lot of safeguards and safety mechanisms in place for the government to receive the taxes, for the creditors to receive their dues. But I've noticed that there's nothing that anybody talks about as far as employees' dues that are not being paid. We saw it happen from Kingfisher and then Jet and so many other companies that came in later. The employees, they're because they're individuals, and like you said, 1 crore is the minimum. So is there any recourse for these type of, as a group, can they be considered? What happens to them?
Sir, as you said, you are correct. Okay, like employees, they are not getting anything. But Section 53, the waterfall mechanism in IBC, when how company goes for under liquidation, like how the money is going to be distributed. First, it will go to the corporate insolvency resolution process cost, liquidation cost. Then immediately it is coming from workers. Like workers, last 24 months dues we have to pay. In the case of employees, 12 months dues we have to pay. If the company goes to liquidation, then afterwards only it will come to the secured financial creditors. Okay, but really, if the company is going for resolution, then the resolution applicant, okay, is the proposal where he propose more to the secured financial creditors than employees or workers or what you call like even government authorities. Yes, it is a real challenge for employees, workers to get salaries. Even Jet Airways, where they have some 60-70 lakhs of dues, they got only 13,000 rupees, 12,000 rupees like that, okay, in the proposal, in the resolution plan. That is very much this one. And again, yes, as we need to take care of that employees, that is better. And one more thing, the home buyers, okay, in the real estate cases, mainly, where I am dealing with one, like acting as a resolution professional for a company, real estate company, the home buyers are facing a lot of difficulties, where, okay, the corporate debtor or the person sold the same flat 2-3 buyers. Then, okay, it is a major challenge for them also to get. Even that is the reason we suggest don't go for any like early stage companies, okay, real estate especially, go for at least 70 to 80% completion, then at least, okay, you will get your flat. Because of you go for early stage, some discount, the 3-4 years, it may happen lot of things. Thank you, sir.
Thank you very much.
Anybody else have any query to Mr. Venkata Subbarao?
Even not now, sir, even afterwards also you can come back on any insolvency matters. We just definitely help you of any our FinTrack advisors, sir.
Thank you, sir, Mr. Subbarao, for joining at the surprise element for our event. It's always so beneficial to listen to experts like you and Shilpa ji, and your contribution to in the field of insolvency, in the field of company secretaryship, and even the field of valuation is unparalleled. And I hope that we have good fortune of having you as a solo speaker in one of our upcoming sessions.
Thank you, Neeraj.
Thank you, sir. Now, before we move on to our next element, in life we have a responsibility to do certain philanthropic activities to contribute to society, and we at FinTrack believe that this is required by us also. And I'm very happy to have Mr. Sanjeev Bishwas with us, who is one of the key person in NGO called Lighthouse, which is based out of West Bengal, and it supports the education and other activities for underprivileged children. Mr. Sanjeev, if you are there, can you just speak for 1 minute, 2 minutes to inform the participants what does Lighthouse do? Sanjeev sir, you can unmute yourself.
Hi.
Hello, Sanjeev ji.
Good afternoon, everybody. This is Sanjeev here. Yeah, actually, by profession, I am an accountant, but despite that, I am running an NGO which helps the deprived children to study in educational. We are getting them educated through financially or through teaching. So we run a school for the street children. It's in Calcutta. It's started around 10 years ago, and still we have around 50 students who regularly have their tuitions over there. Their school fees, their books are provided by us, and out of them, from the from street, there are few students who are right now starting in college. So they are the first generation of their family who are going to college. So right now they are also as a faculty of our school. They teach us the juniors, and besides that, we do education support to those children who wants to learn, but because of the financial condition of their parents, they are unable to get the proper education or can't afford to for school, college fees or books or tuitions. We offer them scholarship, and it's for not for a particular for a single month. We give them scholarship throughout their learning process. Suppose a student scored good in Madhyamik or secondary level, we help them till they get the job. So we have a student, still we have a student of Sundarban area. You all know that it's a very
remote area.
And that lady was unable to continue study. She started doing hotel management, and in the mid, because of the financial crisis, she was about to leave the study. So when I came to know about her position, we met with your parents, supported the student. And right now she is doing her training, commercial training at Taj Hotel Goa.
Nice.
In 6 months. She's right out yesterday for to sharing with you. Yesterday she called me up, then and told sir I got the first month's stipend. Should I send it back to you? I laughed and told her, no, don't send it to me. Send it to your father. He will be most happy that though her father didn't want her to get the admission, but still I believe he would be more happy when he gets the money from her daughter for her first stipend. So I have a number of students in this pipeline who I think will surely sign in the future. So few of them are doing accountancy honors also. One is doing CMA also. So this is the way we are working.
I think Sanjeev da, what you are doing is excellent because not a lot of people can balance personal life, work life, as well as contributing to society by which you are doing through Lighthouse, Think Different. Educating these children, underprivileged children from remote areas of West Bengal is a very noble thing. To all the participants, anybody wishing to contribute to Lighthouse Think Different can reach out to us over mail or through DM, and we will be sharing the details. And in any case you need any profile or something what they are doing, I can connect you with Mr. Sanjeev Bishwas separately also. So please see, we as an individuals, we are professionals, we don't have time for maybe running an NGOs or directly contributing to society, but if we can contribute to NGOs like these, it definitely helps people like Sanjeev da to do the good they are doing. So thank you, Sanjeev da, for being partner in this event, and I hope that you continue to do the good you are doing. Sir, Sanjeev da, mute ache. Sanjeev da, aap mute hai.
Thanks, everybody. Actually, right now I am sitting with one of my friends and getting some medical equipments for the others also. So I am getting these medical instruments. I can show you.
Yes. Okay.
The nebulizer, these are the walker.
Oh.
These are lying with them, and I am taking this for another person. I am going to, this will be given to a person who has the need but unable to afford them.
Thank you, Sanjeev da. It's people like you who are really contributing to the society.
Thank you all. Thanks a lot.
Thank you. We move on to our next part, and I think this is the part I have been waiting for a long time, which is an address from our keynote speaker, Mr. Sandeep Ohri. Sandeep ji has graciously accepted my invite to be a keynote speaker, and we both are actually visiting. We actually met at an event in Ramaya University where he was the moderator, I was one of the panelists, and so I'm so excited to listen to him that I don't want to waste time on speaking. I would like to ask Mr. Hardeep Narula to introduce our keynote speaker.
Thank you. It will be my immense pleasure to introduce you, sir. Since the flyer was out, there were Neeraj ji, there were you in between, and I was waiting from that very time to introduce you, to meet you virtually and very soon in a person. I would like to begin your introduction, sir. It's an immense and great pleasure to introduce you. Sandeep Ohri ji is a CA and a behavioral strategist consultant with 36 years of experience, known as that strategy guy. That's very wonderful. Certified in behavioral economics by Ogilvy Consulting UK and Irrational Labs USA, He is the auditor of upcoming book Your Behavioral Advantage, with a foreword by Rory Sutherland of Ogilvy, UK. I hope I was correct in the pronunciation, please. Yeah. So he's also author, he's host, he's visiting faculty at various universities. He has been chapter president of Bengaluru, and for USIIC, he has been director International Service Rotary Club of Bangalore. He has been independent director of LA Tim Metal and Industries. His list of achievements is very long, so without wasting any time, and actually, if I'll continue to, I have in my hands, it's very, very long.
I think within 1 hour we will have
No,
to take the
no,
introduction.
no, please don't embarrass me. I'm really honored and humbled to be
This
here.
is with folded hands. I'm with immense pleasure. I had honestly to introduce you. The stage is yours. Sir.
Thank you very much. So thank you very much, Neeraj. Neeraj, when this was like Neeraj mentioned, we were co-panelists at another event. Okay, so good afternoon, everyone. Before we start, I wanted to do something. Just take a moment to think about one client you have who came to you last year knowing that they had to do something. Maybe restructure their business or complete some compliances or take some financial decision, and they've been putting it off. Okay, I'll just give you a moment. Just think of who that person could be. Okay, I'm quite sure each of you has just pictured somebody in your mind, some client that you have, right? So it's not an information problem. It's a behavioral problem. And that's exactly what I'm going to speak about today in this session. So my name is Sandeep Ori, and I've done my CA too. So I do speak, your language, even though I didn't practice. And that's because I've been deeply involved in strategy using behavioral science. And behavioral science is what? It's nothing other than the science of understanding why people do what they do and how to make things better. So I call myself that strategy guy, as you heard, because I believe that understanding human behavior is the most underused strategy tool by professionals today. In fact, I wrote a book about that also. Today, I'm going to explain 3 concepts, and each of them will feel very familiar to you because you've seen them in your clients, right? So, please make notes. I also teach, so I have this habit, so a little bit Professor Giri happens. So please take notes because you will not remember everything. And our brain is overburdened with too many things. So take notes, nothing wrong. Okay, first one, concept 1, status quo bias. Okay, in 1988, I think, 2 economists, William Samuelson and Richard Zeckhauser, they published some study in a journal of risk and uncertainty. We heard about a lot of risk management earlier in the day. Their finding was very simple but very powerful. It said that when faced with a choice, people have a strong systematic preference for doing nothing, for keeping things as they are. It's called status quo bias. Here's the important thing. It's not laziness. It's also not ignorance. This is just how the brain is wired. See, change requires mental effort. Our brain is very good at avoiding unnecessary effort. You think about it from a client's perspective. You are saying all the right things. New financial year has come, new rules are there, new compliances are there, things need to change. You're saying all the right things. What is their brain hearing? Their brain is hearing something different. Their brain is hearing effort, risk, discomfort, oh no, change. And quietly, automatically, it is building a case inside, saying that current situation is fine. Let's wait and see. It's always been this way. We'll deal with it in Q2. Now there is too much at hand. You heard all these things. Now you know why. It's because of this status quo bias. Concept number 2, loss aversion. So in 1979, Daniel Kahneman and Amos Tversky, they published one of the most popular papers of the history of economics. They called it the prospect theory. You must have heard about this. Kahneman, in fact, got the Nobel Prize for it in 2002. The central finding was very simple. Losses feel approximately twice as painful as equivalent gains feel good. Let me say it again. This is very important. So I'll put it simply. Losing 10,000 rupees feels twice as bad as gaining 10,000 rupees feels good. So the maths is equal, but the emotional experience is not. So when you ask a client to change, to do something different, their brain is not doing neutral cost benefit analysis. You see, as accountancy professionals, we have this thing that all numbers are same, but all numbers are not same because emotionally they mean different things to us. So it is disproportionately focused on what we might lose. So that comfort, the familiarity, the feeling that how things are going to work. So the potential gain, which is compliance, efficiency, it doesn't stand a chance because that feeling of loss, that feeling of effort, that is more overcoming us. So that's why this framing matters enormously. So if you say this change will protect you from penalty, now this makes a very big difference to them. So you say this change is good for you to comply. It's the same information, but very different emotional weight. Concept number 3, present bias. This is the one that you are most familiar with. You must have even heard the name. So present bias is nothing other than our tendency to massively overvalue present moment. So what we want right now, can we undervalue the future? So in behavioral economics, we call this hyperbolic discounting. So we discount future rewards more steeply than any rational model will predict. Simple language. Cost of changing feels immediate. Benefit of changing feels distant. So the good will happen in future, but the pain is right now. So what we do? We delay, we defer, we put it in next quarter's agenda. So the 4 most expensive words in any business, I'll start this next year. So we have that. So these 3 concepts, what makes it so important for people like us, professionals who are dealing with clients who have to comply with regulatory change. So in 2014, there were 3 researchers, Heng-Min Chai, Catherine Milkman, and I think Jason Ruiz. They published a study in a journal called Management Science. It was entitled The Fresh Start Effect, Temporal Landmarks, and How It Motivates Aspirational Behavior. I'll break it down for you. People are significantly more likely to pursue goals and make changes after what we call temporal landmark. Okay, so temporal landmark is what? This is moments that feel like new beginning, new year, new month, birthday, Monday, start of a week. Why? Because these landmarks have psychological separation from past. It says, that was the past, now there's a new future, I can make a fresh start. It's like, how we make New Year resolutions on 1st of January, why we don't make it on 1st of February, because the calendar year has changed. You feel you want to make a new start, so it's like that. So that is what happens on 1st of April. New financial year begins, new targets are set, new budgets are drawn, and also new rules come into force. So the 1st of April is a very powerful, what we call temporal landmark for the Indian business calendar. It's also one of the best moments in the entire year to initiate this change. Not just because the law requires it. Of course, the law requires it. All these things come into effect on 1st of April. But also because the brain is more open to changing from this particular date onwards. It's like a threshold. So people are already in new beginning mindset. The resistance to change is actually the lowest because they want to do something new. So optimism is very high. New financial year, now previous targets, CK last year was bad, forget about it. Now we have a new year, let's look forward. So as advisors and financial professionals, this is your window. This is the moment to have the conversations that you've been trying to have, because now that behavioral science is on your side, right? So now that you've understood a little bit about this behavioral science and how the brain works when it comes to all these issues, let me give you a little bit of some takeaways as to what you can do with this. Right? Not just theory, how you will apply it. Right? First one. So you, first of all, like we said, you reframe this change as loss prevention, not as gain seeking. So the minute you say that, if you don't do this, you will lose, we tend to listen to that better than to say that this is good for you. It's like when I advise startups, I tell them, it's like your product or service. The difference is between a vitamin and a painkiller. If you forget to take your multivitamin, nothing will happen. If you forget to take your painkiller, whole day you will be in pain. So you'll never forget your painkiller, but you may forget your vitamin. So what are you taking? So the product that you bring to the market for your customer, is it painkiller or is it vitamin? अगर vitamin है शायद भूल भी जाएगा, अगर painkiller है तो बिल्कुल नहीं भूलेगा, so they will use it. So when you're advising a client on a new regulation or required change, don't lead with the upside, lead with the downside. Start by saying what is the risk. So I know it sounds negative, but that is what the brain listens to first. Negative news travels faster than positive news. You know it. WhatsApp forwards, you'll get all the bad news, for multiple groups. Good news you'll not get everywhere. So you should tell your client, here's what you stand to lose if you don't do this. So instantly in their brain, that loss aversion gets triggered, and then they will start listening to you. So it's the brain's natural wiring. So don't fight it, use it. So what I always say is, this understanding, it's not whether it's good or bad. This understanding will help you become better. So it's not a manipulation, it's communication which people will listen to. Second tip, use deadlines as commitment devices. Typically what happens is, you will tell your client, I will do this, you should do this. So what happens is, when people publicly commit to a deadline, they are more likely to follow it. Now, if you and I are personally talking, if I say I'll do it tomorrow, well, if I don't do it tomorrow, only you know. But if it becomes public, publicly I posted somewhere that I will, I don't know, start going to the gym every day from tomorrow. And somebody sees me not going to the gym, everybody knows because it became public. So when a client says we'll look at it next month, don't just leave it at that. Nail it down. What date? Make it specific. Who else in the team knows? Tell 4 other people. So the more people know now, that intention which was there has become commitment. So that's something that you do. You nail it down and make that intention into a commitment. But that first step is always the most difficult, and we all know that. So make that first step a tiny step. So one of the key findings, you must have read this book called Atomic Habits by James Clear. And he says the same thing. Our brain resists change. It's not easy to change. Try to change your own habit, you can't change it. But because change feels very large, very effortful. So what do? You make small steps. So instead of telling your client that you have to change everything, you have to do this and all, you just say that, okay, let's do a 15-minute call or a 30-minute call. And so let's not call it restructuring and financial planning. We'll just say, let's look at one aspect. It does not have to be a very big thing, just one thing. You see, what happens is when you start, which is the hardest part. And once that start happens, then the client also feels, I can do this. This is small change. Okay, so you do this in what we call as baby steps. So once somebody has taken that first step, the chance of taking that second step is also much more. Rather than you tell them that, you have to do this 10 things, I say, do this one thing. Let's do one thing. Let's do it next week, and let's do one thing. Then it will happen faster. This motion will create this momentum that will happen. So if you recall, we started off by saying that, you had a client who said we'd do something and didn't do it. So I'll just reframe that question for you. The problem, as I said, is never the knowledge or the information. See, your clients trust your expertise. They hired you because you're an expert. They know you know the subject. But what they are also struggling with is the human experience of this regulatory change. So you have to be understanding of the challenge that they are facing. You know that it is good for them, but you must also know how to tell it to them, right? So that discomfort, that uncertainty, that fear of loss, that present moment pulling. So all of this, if you have this understanding, it doesn't make you less of a financial professional. It actually makes you a better one, because now, just think of it. You go to a doctor, and the doctor will give you a whole clinical list of things that are happening to you. But if the doctor is little more, has showed a little more empathy, talks to you kindly, breaks it to you gently, tells you, explains to you nicely, you like that doctor, right? You want to go to that doctor. You don't avoid that doctor. It's the same thing. You still have the same challenges that you had when you went to the other doctor, but you want to go to this doctor. You find this doctor nice. That's what we all want. So if you make your job simpler, so you do that. When you understand why people behave the way they do, you can meet them where they are and you can help them to get better. So that's the whole point. So regulation will tell us what must change. Behavioral science will tell you how to make it happen. Okay. So I wrote this in a book. I called it Your Behavioral Advantage, because if you read the book, you will end up gaining those advantages, which otherwise you'll be struggling to how to convince your client to do that. So that's what I I thought that, I'd share this with you. Hopefully it'll make, some of your job simpler. And I'll be very happy to take any questions or even connect with anyone, after the session. So feel free to ask questions. I may not have all the answers, but I will attempt to answer all of them. So thank you very much for your patience. Yeah.
So this was till now the wonderful period of this session. I enjoyed it, sir, a lot. When you said about the atomic habits, I have a book with me. Like your lecture is your session was a mixture of atomic habits and power of your subconscious mind. Honestly, I have it with me. Like I always read this because this is one of my favorite books. Honestly, it's all with your habits and your subconscious mind.
And it's everywhere. It's not just financial regulatory change. You want to change your own habits, you want to change your own character, personality, health, relationship. It's everywhere. The fundamental is still the same. Our brains are what they are. There is no on-off switch that people say that when I go home, I can switch off. Honestly, you can't. You don't. We are not machines. We are human beings. We carry the same brain to work and the same brain home. So that's what it is.
So you are kind of that magnet to us. I would say that strategic magnet would be a better name. I would want to attend more sessions, especially in person. Please do share with Neeraj with us your upcoming sessions. Looking forward. Amazing. Honestly.
I think somebody has a question. Ashwin has raised a hand.
Yeah, Ashwin, you kindly unmute yourself.
Yeah, so I don't know if it's on lighter note or anything. How about we ask, we are appointed as a retainer with many of our clients. How about we asking our clients to change their fees from 1st April? Increase.
Why not? If you haven't, okay. The prices of everything changes, okay, and the government changes it whenever they want. They also announce the CPI, WPI all the time, every month. Okay, IIP is announced, PMI is announced. So all indices are announced every month, with factors in inflation. People have to break it to them sensibly. See, what will happen is most people, and I've noticed this, I could be wrong, Ashwin, but most people, they will start wondering that why should I pay more for the same thing? You see, that question will come. So you gave me the same service last year. Now you're giving me the same service this year. Now, just because the calendar year has changed or the financial year has changed, why should it be any different? Okay. So you will have to find a way of justifying that, okay, you can't say that, well, everything is changing, inflation is going up, so therefore you have to give me. They won't buy that story.
Sir, you want
to buy that story if I tell you that, that you retained me. Now, for giving you the same gyan, I want more money because the calendar year has changed. So what
petrol ka price we can compare, na? Usko last year se petrol ka price.
Sir, ऐसा है. अगर पेट्रोल के प्राइस की वजह से अभी if I'm using petrol in the manufacture of something, then it's a different story. Then you can say manufacturing costs have gone up because everybody knows electricity rate will go up, freight will go up, insurance will go up. Those are different assets. Services is very challenging. Professional services when we offer, it's very challenging to get the client to agree that, when you used to pay me, I don't know, 10,000 rupees a month or 20,000 rupees a month, now you have to pay me 22,000 rupees a month. They will fight you even for that.
Exactly. Yeah.
So what will need to happen is you probably need to show, I don't know, break it up, show it differently. You will have to use what we call as framing. Behavioral science has that framing. It's like, okay, so I'll give you an example. You'll probably understand. So when you go to buy yogurt, so you'll see some product which says 90% fat free. Okay. Now there's another product which says 10% fat. That's same. Okay. Both are same. Okay. 90% fat free and 10% fat, both are same. Now you are not likely to pick up which says 10% fat.
Right.
You are likely to pick up which says 90% fat free. Dono wahi hai. But the way it is presented is different. So you will have to see for each individual client, because all of us are differently built. Okay, somebody will get convinced by logic, somebody will get convinced by emotion, somebody will get convinced by example, somebody will get convinced by that person is paying so much, therefore you should pay. We all get convinced by different things. So you will have to understand your client and personally figure out that, okay, what is it that is going to convince this guy? I've spent 36 years in sales. And I can tell you, you know, it's we are all salespeople. And you know who are the biggest salespeople? Parents.
Right.
Because they have to convince children to do things. Very difficult to convince a child. So anybody who's a parent is a salesperson, right? Because you convince children to do it. So you have to figure out what will convince your child. Of course, lastly, you will say that because I said so, but anyway, with client, you can't say that. But you will have to figure out, you know, and you will have to break it to them. See, it's human behavior. They are people. You will have to factor that in. I don't know if I answered your question, but you know, that's the approach to take.
Yeah, so what I wanted to ask was whether on 1st of April they'll be more open to change in fees, or how they'll see this.
So my suggestion is, see, because on 1st of April, generally lots of things will change for them. Okay, salaries will come up, you know, appraisals will happen, all of that. It may not be the best time to try and put your increased bill also in that list.
Right.
So maybe do it at a time where it is less painful for them. You know? Maybe, you know, unobtrusive time, either where it is, I don't know, July, August, if it is not that time where they have too many commitments to make, or maybe November, you know, pick a month where there is not too much financial commitment of the client, and at that time put it in. You do it from November to November. Now what difference is it? Because the client will find it more, you know, I don't have any other commitments. It's like, you know, 31st March, you go to some people for donation, you know, everyone is paying taxes and investments and this and that, and nobody has money to do anything else.
Agree.
So that's not the best time to do it. So you approach them later, you know, go in the month of May, go in the month of October, you know, then again, you know, you have Diwali and bonus commitments. So go in November, go in December when they are in, you know, mood to spend the money, and Christmas, and, you know, everybody's happy. Go at that time.
Perfect, sir. Thank you.
Thank you.
Any other questions from anybody? I think everybody can have some question on this.
I'm sure they all have questions. They're wondering whether, you know, that's also human nature. Suppose I ask a question and you look stupid in front of so many people, so better not to ask. No, so don't worry, please go ahead. You will be amazed at the number of stupid questions I have asked. You know, so there's no such thing as a stupid question. Please ask, it will help other people.
I would like to ask on the behalf of everyone else, how to kill procrastination. Like how to make on behalf of everyone, honestly telling, everyone here is a procrastinator, everyone.
So, Harsdeep ji, what makes you think I am not? I'm also a human being like you. You know, I tell all my students and, you know, the people in my workshop also. I tell them, just because I know all of this, what do you think? I don't face these challenges? Of course I do.
Correct.
Yeah. So, you know, so I had also meant to put the registration for today's webinar. You know, I thought that I'll do it. And Neeraj ji will tell you, I did it at 10:30 last night.
All Indians are like similar. We do it on the last date when the deadline is.
There are steps, there are things that you can do. Of course, you can overcome procrastination, but, you know, okay, I'll give you one tip which will probably help. You see, a lot of people say, Neeraj ji, we have time? We have
another 5 minutes.
Okay. So I'll give you one tip, which I think, you know, is really very helpful. And I found this personally also. See, we need to be, you know, as we say, convinced to do things. See, why do we not do something? We don't do something because we don't think it is important for us. Okay. That's the reason we procrastinate. It's important, lekin urgent nahi. You know. So, you know, those 4 quadrants, important, but not urgent, you know, the 4 quadrants, Stephen Covey's are there. So what we do is generally we attend to the urgent things. We don't attend to the important things. Then we say we need to be motivated. What I have noticed is it's not about motivation. It's either we get convinced it is urgent and therefore we will do it, or we have to be motivated to do something which is important but not urgent. More than motivation, it is actually self-discipline. Our challenge is discipline. Our challenge is not motivation. If we crack the discipline wala issue, everything becomes simple. The problem is we are very indisciplined. Now, it's not like small children, you can say sit in one place. So discipline has very different meanings. And self-discipline is just the ability to figure out and tell yourself that, you know, delayed gratification If we learn that, that's where meditation comes in. A lot of people meditate because, you calm your mind, you control it, you center it, you focus on one thing. Those things matter. Those things will help you to deal with procrastination. So if you center yourself, if you calm yourself, if you're able to meditate, if you're able to self-discipline yourself, that will help you to overcome this procrastination part. Otherwise, there is no hope. I mean, I'll convince you to do something today. Then tomorrow again, you'll wake up and say, I'm not motivated. I don't feel like waking up and going to the gym today. I have some exercise or reason. Aaj yahan pe dard hai, kal wahan pe dard hai. There's always some reason or the other. But discipline is like, no, I just have to do it. So that will help, nothing else.
This is what I wanted to hear, and this is what everyone else wanted to hear. Honestly,
Yeah.
sir. Even I was like going through. I'll place the order for your book right away.
Yeah.
It's
Very
done,
good.
sir.
Yeah. Thank you very much, Dheeraj ji. And if anybody
This is
has
the
any
first step
questions,
of not procrastinating. You did not procrastinate or delay.
See,
आपने अभी order किया.
no delay. Like ordered your book right away, sir.
Thank you very much.
थोड़ा discount coupon code भी दे दो, sir.
Oh, another thing about procrastination. I've been meaning to figure out how to do that. I've not yet figured out how to do that. It's
I'm
just
open to
because-
cashbacks.
That's a good one.
जी.
Yeah, I just dropped my email ID in case anybody has any further questions. Please feel free to email me also. But yeah, thank you very much. Any other questions is there, or I can hand it over back to Dheeraj.
Good afternoon, Sandeep sir.
Good afternoon.
Yes, I wanted to say namaskar in this session. When we are in Rolta, you are the first introducer and you
Yeah.
are the first guider to me.
Oh,
That's
thank you
what-
very much.
Yes, sir. Thank you, sir.
So we have been ex-colleagues in a company that I worked for almost over 10, 11 years. Yeah.
Yes, sir. Yes, sir.
Yeah.
Thank you
Thank
so
you.
much.
Thank you, sir.
Thank you, Sandeep ji, for taking time out of your busy schedule and
My pleasure.
accepting my invite, because obviously this is more like a finance background, and I thought I really wanted to bring in something because people we only talk about compliance and all that, but if our mental state is not correct, then I think we can never excel in this field, because it's a demanding field. Whatever we professionals are doing, it's a very demanding field, and without proper strategy, you cannot excel. And I think that's why this 20-minute session by you was so important for all of us.
Thank you very much. Thank you for having me. My pleasure completely.
Thank you, sir.
Thank you.
Now we move on to
Thank
our
you,
next.
sir.
Thank you. Now we move on to our next event. We are now moving to panel B of our discussion. We had some wonderful speakers in panel A, and I think that panel B will be more elaborative. I think people will be more interested, because we have one of the most relevant topic in panel B, which is income tax, and which is being taken care of by Mr. Ashwin Jain, CA Ashwin Jain. He's joining us from Surat. So again, another state, another western part of India. We are moving from south to west. And Mr. Ashwin Jain is a chartered accountant. He has 15 years of experience in virtual CFO services, regulatory compliance and startup services. He's a profound
ಕಮಲಾದೇವಿ ಅವ್ರ ಮಗಳು ಡಾಕ್ಟರ್ ನಳಿನಿ ಕ್ಲಿನಿಕಲ್ ಇದಾರಲ್ಲ ಡಾಕ್ಟರ್ ನಳಿನಿ ಕ್ಲಿನಿಕ್ ಇದೆಲ್ಲ
Yeah, sorry for the interruption. So Ashwinji, the topic, I think you have taken on the most challenging topic, because income tax, everybody is a guru in income tax. So to teach to gurus is a different ball game. And without further ado, then I will set the stage to you to start your discussion, sir. You are on mute. Yeah.
Thank you, Neeraj ji, for giving this opportunity. And I like to first of all give earlier income tax had many sections starting with notwithstanding anything contained anywhere in the act. Same way, notwithstanding whatever is said, I am also a humble student, and this is a new act that has come in, and of course I'm given 15 minutes, which is definitely not suitable for the provision. So I'll try and I'll keep the whatever are the interesting facts of the new income tax, I've tried to compile that so that we, we get a motivation, as Sandeep sir said, to read the act. Definitely we can start it, and let's start. I'll share my screen. I hope the screen is visible.
Your screen is visible. Can you just cancel this short?
Yeah, I'll do that. Sure. So I'll try to cover in the next 15 days the journey, the transformation, the methodology used in the new act, and the impacts, the key sections that have changed, and how should we go ahead with that. So the journey of income tax started somewhat in 2009, where the direct tax code was introduced. Then 2015 to 23, there was no movement. In 2024, there was a budget announcement, and in 2025, the bill was passed. And from 1st April 26, it is getting implemented. So why this was necessary? So this had somewhere around 65 times it was amended. There were 4,000 plus amendments. There were 1,200 plus provisos, 900 plus explanations. We know everything. I mean, what all we were handling for this many years. I'm sure all the professionals were, catching up to that. But it is said that change is the necessity, and this change was very much necessized, and this was very much this is very essential. And one thing what I have understand by reading the new act is it is quite easy as compared to the previous act. So it is much more easy and much more readable. It does not have much jargons like notwithstanding, and it is the notwithstanding word is replaced by irrespective of whatever content. So it becomes more easy and friendly read. Then there are some fun facts that what are the transformations in the numbers. So earlier act had 819 sections, which has brought down to 536 sections. There were 47 chapters, which has come to 23 chapters. The words that contained in previous act was 5,12,000, and now it has come to 2.6 lakhs. So this is quite a good number. They have removed 1,200 plus provisions, 900 plus explanations. Many things are, many things have become machine readable, or we can say that we can easily read and understand someone who is trying to catch up with the Income Tax Act, and due to these things he was not able to catch up. This is the right time to read the new act. It is very easy and very much user friendly, we can say. Let's understand how the drafting was there in the previous act. So it had sections, then provisos, then second provisos, and then explanations, which is now replaced by sections and clauses and then tables. So now we have a proper tabular format, which says that, scenario wise, it gives you analysis, how this thing provisions goes. This thing has increased. The tables, earlier act had only 18 tables, which has now increased to 57 tables. This replaces the lengthy provisos into tables. So you can now, rather than earlier we used to mention that this section, subsection 2 of section 43 is now, you'll be mentioning that serial number this of this table contained in the section. So that is how our drafting will change. But it is, believe me, it is much more easier read. there certain critical sections have also changed. Like the previous year previous year assessment year has been replaced to tax year. So the confusion we had of, making our clients understand AY and FY, and, they used to ask for documents for the loan purpose and all other purposes. Ye saal ka dijiye, wo saal ka dijiye. That has gone now. So we'll have only a single year, which is much more easy to understand. Then there are certain important sections I have noted that they have changed. These are regular sections that we go through. This 139 section for return filing has become 262. Assessment year used to happen under 147 to 151. So it has become 279. TDS, there were a lot of sections, 192, 194, A, B, C, D. That has been compiled into 2 sections only, 392 and 393. So only 2 sections. The major framework that you see, the section 11 to 13 that we had in the earlier, in my 13-14 years of practice, I was not able to match up with this section of 11, 12 and 13, which has now come to they have basically every provision has become a section now. So that is why here you can see that 3 sections have increased to 332 to 355, around 20-22 sections. But each provision which used to give a separate meaning has become a section. So it becomes much easier for NPO taxations and NPO compliances. Section 11 to 13, I remember in my CA final, I just skipped this 11 to 13 section only because I was not able to cope up. So this has become much more easier now. Some very good benefits for the employees, those who are into employment or they have employees as their, clients. For those who are filing the returns, the gift voucher has become from, this is tax-free 5,000 to 15,000. This is irrespective of the new or old regime. However, the children and hostel allowance is under the old regime. Then interest-free loan has become from, earlier 20,000 to 2 lakh rupees, which is a big perk. This goes with irrespective of the regime. That is also a very big advantage. Now there is a very important thing that has come in, that if we mention that we maintain our records or accounts electronically, then it is said that it must be on a server or on a cloud that must be accessible from India at all the times. So basically, at all times, you should be able to access the electronic, you as in you, the authorities, anybody should be able to access it at all the times if it is maintained in electronic mode. If you say that it is maintained in physical mode, then it's a separate game. Then the backup server should be located in India. You need to maintain your books on daily basis. Like earlier we used to do on monthly or on a weekly or on a quarterly basis. Now it says that if you're maintaining it electronically, it should be on daily basis. Some important forms have also changed. 3CA, 3CB, 3CD has become Form 26. TDS return 24Q has become 138. There are certain form changes that is not a very big thing. We can catch up with that. What actions we should take, before the year start is update and reference charts. So I have given just a second. On income tax, there's a link wherein you can simply mention the old provision and the new provision will come. They have created a utility which you can refer. Review that if the electronic books maintaining compliance for clients are your clients or the accountant is maintaining the electronic mode, then this thing is complied or not. The new form numbers, you should be ready, and you need to train your teams. These are key takeaways. We can say that there's a 49% reduction in words, 34% reduction in sections. The tables-based drafting will be built in with built-in examples is very much easy to understand. There are critical sections which are renumbered, and draft rules comes. Thank you.
So Ashwinji, first question from my side.
Yeah.
Is any prominent section you feel which has drastically changed in the new law? Any from the old law?
No, the law remains the same only. The context of the law remains the same only. Certain things that have come, like one thing that we need to understand is, like for 44 AD, earlier the clients as well as the professionals used to do something like for claiming 8% or 6% profit. So if the turnover did not cross the limit, they were not required to do audits. I mean, get their books audited, even though they are showing lesser profit than 6 or 8%. But that provision has been changed now. Now either you show the 6 or 8% or you go with the audit provisions. I mean, you have to get your books audited. Then one thing has come is that is like for this thing, what do you say? For claiming the international tax credit, which is more than 1 lakh rupees, you need to take a certification from a chartered accountant.
Okay.
Then the form 10F was there earlier for doing the remittance outside. So that has been worded. Now you need only tax residency certificate and the new form, and you don't need a no PE certificate. Earlier there was a no PE requirement. So that has also been gone away. I mean, they have tried to, make it as easy as possible. And someone who is getting into practice or who is into separate field of practice and want to start income tax, this is the very right time, I'll say.
But sir, अगर simplify हो गया तो फिर practice में क्या करेंगे? Professional के पास public जाएगा, then when it's complicated.
Simplify for us, not for client. The law remains the same only. Because आप देखेंगे तो for professionals 2-3 areas have increased from the work angle, that like this audit that we say or the certifications we say.
Okay.
Yeah.
Anybody else have any other question regarding income tax? Obviously, it's a big field. Lot of changes. Purely, but major changes as per our esteemed speaker is on the maybe the literature part of the nomenclature of the sections, and the onus was here was to reduce the overall structure of the provisions and all to make it more simplified. I think we have one query from Nidhi Agarwal. Nidhi, kindly unmute yourself and you can ask. Yeah, Nidhi, please go ahead. Nidhi, you are on mute, I think. Chivika, you can ask your question till the time Nidhi comes back.
Yes, I wanted to ask Ashwin ji that this SVB, sovereign gold, SGB, sorry,
SGB.
sovereign gold bonds, if you're purchasing now in secondary market, it is becoming taxable. So if I have already purchased it before 1st April, तभी क्या टैक्स देना पड़ेगा मेरे को, या जो मैं 1st April के बाद खरीदूंगी उस पे ही टैक्स देना है?
हाँ, so जो उन्होंने अभी प्रोविजन लाया है ना, so anything if you have purchased from secondary market, I mean if you are purchasing or you have already purchased, तो उस पे वो लोगों ने अभी टैक्स लगाया है. बट काफी सारी चार्टर्ड अकाउंटेंट एसोसिएशंस ने और सबने रिप्रेजेंटेशन दिया है मिनिस्ट्री ऑफ फाइनेंस को दैट यू कैन नॉट पुट अ रेट्रोस्पेक्टिव टैक्सेशन. So we expect that it might be dropped or there might be some positive this thing on that. But definitely if you are purchasing after 1st April 26, then though you have to pay tax on redemption from secondary market.
मतलब अभी SGB खरीद सकते हैं, might be कि वो टैक्स नहीं हो 1st April के बाद, हो भी सकता है मतलब.
हो भी सकता है.
I think the provision was that as per my knowledge, that they wanted to immediately, that provision of SGB become taxable if you buy in secondary market becomes applicable immediately. It was not a part of the 1st April change. Okay, it was an announcement notification which came as, so it became operational as soon as possible, like the day it was notified, right?
No, let's say that you sell it before 31st March, तो वो provision नहीं लग रहा है. अभी आपको tax नहीं लग रहा है.
हाँ, selling में नहीं, buying में अगर आप secondary market
हाँ,
से
buying में तो it's on the selling time पे taxation लगता है. So उस time पे तो provision लगना ही है. But आप आज अगर आपके पास है और आप बेच देते हैं तो उस पे tax नहीं है अभी तो.
अच्छा, understood.
Nidhi, if you are back, you can ask your query. Nidhi is there, but I think she's. Nidhi, you are. I think there must be some issue with her system. She can write on the chat box also.
No problem. She's like.
Nidhi? Nidhi, if you have any issue with the mic, you can write on the chat box. I can. Okay, I think there's some issue with her mic or something. Anybody else have any query regarding income tax? Or then we can move on to our second part.
Income tax, there will be queries, but of course, we have to read and you have to waive it. I mean, we have to go with the waves as and when. Because one thing I forgot to mention, there's the last section. It says that till the time the previous provisions are applicable, both the acts need to be read, and you need to read both the acts and take the decisions. Like,
Right.
let's say that you have
Transitional phase
ATG.
right now.
Yeah. So let's say that you have ATG approval for 10 years or 5 years. So wo uske andar you have to refer both the provisions while going for the renewals and all.
So thank you, Ashwinji. Thank you for taking out time on a Sunday and joining us all from Surat and giving I think, one of the most relevant topics, income tax, because it is one of the topics which, affects everybody. So thank you. And we hope that in the coming sessions of Interact, you are coming back as a solo speaker and giving us 2-3 hours of all the changes of income tax.
I'll try.
Thank you, Ashwinji.
Thank you so much.
Thank you, Ashwin.
Thank you. Bye.
So now we move on to our second speaker of the day,
Hello.
Jivika Poddar.
Sorry.
Nidhi is saying something.
Yeah. Sorry, I have one question with Ashwinji.
Yeah, please.
I'm really sorry. I had some problem internally with my.
No issue. Please continue.
So I wanted to know, like, since there are so many changes in the Income Tax Act, like 816 section has been reduced to such a drastic number, and there are the section have been merged with each other, and even new sections have been introduced and other things. So is there any platform where as a professional we can learn ourselves again, go through these sections, or like how to what is the right method to upgrade ourselves? Like if I want to because as a professional, everyone knows that we don't have ample time. So with the paucity of time which we have, like how we should upgrade ourselves, like what is the method, or what is the techniques we should follow?
Yeah, so basically if you if you are a physical book reader like myself, if you order that Taxman Barrett, it is coming with comparisons. So I think the provisions as such remains the same, the logic remains the same. You just need to know that some certain provisions have been merged into sections.
Okay.
So I have shared a link also. It's on Income Tax Portal also, wherein if you mention the old section, you get the new section.
Okay.
Or you mention the new section, you get the old section, both ways.
Okay. Where is the link?
I have shared in the chat.
Okay. Thank you, Ashwin.
Yeah, thank you.
That will help. Yeah.
Yeah,
It's a wonderful section. Thank you.
Thank you, Nidhi. Thank you, Ashwinji.
Thank you.
Without any further delay, we move on to our second speaker of panel B, Jivika Poddar. Jivika ji is joining us all from down from Bangalore again. So, and she will be speaking on the recent changes in FEMA. I ask my co-moderator, Mr. Harjeet Narula, to introduce her.
Thank you very much. And first of all, thanks for your patience, Jivika ji. Literally, matlab, hota na, when we are like, we have to give our session and our turn is coming after 5 or 6 other sessions, then we are just waiting for our session eagerly. Yeah, 30 minutes, so we want to get done with it just. So thanks for that, your introduction part. Jivika ji is a company secretary, LLB graduate and a registered valuer with over 12 years of experience. She runs her own firm, Jivika Podar and Associates, where she advises companies on corporate laws, FEMA, business restructuring, valuations, and regular secretarial matters. She has worked closely with startups and private companies, especially on business valuations and fundraising related matters. Jivika ji is passionate about her work continuously explores new developments in corporate laws and business valuation. So Jivika ji, over to you. We would like to hear the new topic from you now. Thank you very much.
Thank you so much, Neeraj and Harshdeep. Thank you, Neeraj, for a kind introduction. And thank you to all the participants who have joined today. So I'll start my presentation. The presentation is visible to everybody?
Yeah, Jivika ji, it's visible.
Yeah. So today's topic is 2026 regulatory transformation. And I will be covering the topic FEMA, and I will be covering FEMA trade-related amendments and ECB regulation amendments. So before moving to that, there has been a very recent change which has been approved by the cabinet, where they have allowed investments from land border sharing countries. As we know, Press Note 3 was issued in 2020 around COVID time by the government, where they restricted receiving any investments from countries which share land border with India on automatic basis. It was all on approval basis. And those approvals were taking a lot of time. So now the government has eased the restriction. So any entity or any person residing in a land border sharing country like China, Pakistan, Nepal, Bhutan can now invest in Indian entities, but they should hold only non-controlling interest. That means up to 10%. Further, the government has also taken this step that they will be focusing on giving faster approvals for investments in strategic sectors, like which are capital intensive sectors like electronics, electronic components, and capital goods. In these kind of sectors, when any approval is being sought, they will be giving faster approvals. We can move on to the next slide. So apart from this, there have been 2 more amendments. First amendment is relating to import-export regulations. So next slide. So what has happened? The RBI has issued a notification prescribing the foreign exchange import and export regulations on 30th January 2026. However, these regulations have become effective from 1st October 2026. What we are seeing now is that the India's foreign exchange regulatory framework is now shifting from a permission-based regime to a principle-based regime. So here what RBI is trying to do, they are trying to take the role of policy oversight and monitoring, whereas authorized dealer is now being given the role of processing and examining cross-border transactions. So this shift in the RBI outlook and mindset, it reflects India's broader effort to simplify cross-border transactions and to promote ease of doing business in cross-border transactions. So this export and import regulations, which currently included a lot of master directions and a lot of notifications, have now been reduced to just 19 concise regulations. And AD Bank has been given ownership for most of the compliances, for regulating most of the compliances. Next slide. So, and one more thing, when on 1st October 2026, these regulations, foreign export and import regulations, come into effect, the existing master directions on import and master directions on export, they will be superseded, and only these regulations will be in effect. Now, one question comes, why so much gap between the notification and the effective date of notification? The reason is the government wanted to give some time because exporters, RBI, AD banks all need time to adapt to these new regulations. Plus, there are certain forms like IDPMS, EDPMS, which RBI needs to update from the backend. And this time gives everybody the comfort to align with the amended regulations. That is the reason, though the notifications have been published now, they will be effective only from October 2026. Now, I will be discussing few important points, few important changes in the regulations, because it's not possible to cover all the changes in such a short span of time. So here, first point which I would like to bring to attention is regarding the exporters caution list. There is an exporters caution list which is maintained by RBI on the basis of recommendations from the AD bank. So this the exporters who are in this caution list are allowed to export on certain conditions. Now this exporter caution list has been removed. Now the new regulation says if any exporter which has exported any goods or services and is not able to realize the export proceeds after 1 year from the due date, there will be automatic consequence. Basically, they will not be allowed to do any further exports without getting the entire amount as advance or towards an irrevocable LC. So earlier there was a list which was maintained. AD Bank has to recommend the name into the list depending on certain criteria. All those has been removed. If the exporter is not getting the money within 1 year from the due date, automatically he will not be allowed to do further exports until it meets these conditions. Next, for imports, it was required to previous slide. Yeah. For imports also, it was a period of 6 months was there to make payments. Now that period has totally been removed, and now it has been made applicable as per the contract. So basically, the importer will be entering into contract with this client. Whatever time period is mentioned in the contract will be followed for making the payments by the importers. So what has been done is AD Bank has been given the power to regularly monitor IDPMS, that is Import Data Processing Management System, and they have to follow with importers to make the payments within the period which has been specified in the contract. So this is as per the contractual obligation. There is no time limit prescribed by the statutory authority. Next. Another thing is for export proceeds, the amount is still required to be realized within 15 months period. That still remains. But there's one more addition, that in case the exports are being settled in INR, then a period of 18 months have been given under the new regulations. Now this extra 3 months have been given because the government is trying to promote international trade in INR, as we all know. Plus, for settlement of trade in INR, it takes some time, some special banking arrangements. For that reason, that extra 3 months has been given for export proceeds in INR, for realizing export proceeds in INR. Now, if exporter is not able to realize the amount, or if they want a waiver or they want a reduction in the export proceeds, then earlier, and in the earlier regime, they had to there were certain terms and conditions, certain criteria, certain percentage limits, CA certification, lot of things were required to do and to be submitted with AD Bank to get this exemption or to go for lesser realization. But now this has been consolidated into a single principle that AD Bank has the power. If AD Bank is satisfied, there's no terms and conditions mentioned as such. It depends on the AD Bank. If AD Bank is satisfied, it can waive off or allow for a short realization of export proceeds. And for up to 10 lakhs, nothing is required. An exporter can give a self-declaration to the AD Bank, and it can go ahead with a reduction in export realization. So basically, the focus of the government is on easing the entire process. Next. Further, as we are seeing that the RBI and the government is putting more and more focus on AD banks to take care of these transactional matters, they have also asked AD banks to draft internal SOPs and policies where they will be defining the entire framework, entire nitty-gritties. And these policies and SOPs may change from AD bank to AD bank, but it will be oversighted by the RBI. So they have also told this policy should have an mechanism for handling customer grievances, and an appeal mechanism should also be there where the customers can make appeal to a higher internal level, and this higher internal level should take a final decision based on the grievance. And these policies and the SOPs, now AD banks are required to disclose on their website so that the customers can visit the website, know about their policies, and compare them across different AD banks, and then proceed and take decision with which AD bank they want to move forward. Now, regarding the soft text declaration, earlier the soft text declaration was required in case of export of software and services. So now this has been done away with. Now there is only one form for declaration, which is form EDF, export declaration form. So this is required to be submitted in case of export of goods at the time of export, and in case of export of services, it is required to be submitted within 1 month, within 30 days from the end of the month in which invoice was raised. So suppose if today is 15th March and I'm raising any invoice in today's date for export of service, then I have time till 30th April to file this form EDF. So basically, I don't need to file any form for each invoicing. I can accumulate the invoice for a month and then together file one single form EDF. But now every monthly this has to be filed. Next slide. Okay. So I spoke about amendment in import-export regulations, which are going to be effective from 1st October 2026. Now there has certain amendment has taken place in the ECB framework, which is already effective from 13th Feb 2026. I'll just highlight few important points regarding amendments in the ECB framework. So there are certain definitions like control, net worth, Indian company, which was earlier not included in the ECB regulations, have now been defined, which brings more clarity. And as we go forward in the slide, we will see how the regulation relating to borrowing in the form of ECB has been eased. One more thing is that under the new regulations for giving security in relation to ECB, intangible assets have been recognized. Earlier, if a company was taking ECB and it has to give any security, it could give the security only on its fixed assets. But now, intangible assets have also been recognized. So it helps the non-asset heavy company or IT related companies to raise ECBs and to give their IPs or intangibles in their books as a security. So this is a very welcome move. Next is what the new ECB regulation has done. It has increased the pool of recognized borrowers as well as, eligible borrowers as well as recognized lenders. So now, earlier LLP was not allowed to borrow ECB. Now LLP has been included. In fact, if we see the definition, it says any person resident in India other than individual can borrow. Of course, it should be incorporated or registered under central or state act. So certain conditions are there, but from the last existing framework, it has been it has been eased. Coming to the recognized lenders also, it has been definition has been widened to include a lot of people. It just says a person resident outside India. So earlier, we as professionals used to get a lot of questions like this, that we want to borrow ECB from a company which is outside India. Can we do so? So under the earlier regulations, you could borrow money from any corporate or any individual outside India only if that person was a foreign equity shareholder in the Indian company, that is to 25% equity shareholding. So now that condition has been done away with. You can borrow ECB from any person who is resident outside India, irrespective of any equity shareholding criteria. That person or that entity does not need to own any shares in the company before giving ECB. Another thing is the definition of real estate has been explained, has been clarified. And if anybody is taking ECB borrowings for their personal use, it has been allowed, which was not allowed earlier, which was not clear earlier. Then second thing is they have also allowed taking ECB for investment in shares and securities, in listed or unlisted securities. But there's one condition. It can be used only for transactions where some merger, amalgamation, basically some type of corporate restructuring is happening under any of the acts, maybe Companies Act, SEBI, IBC. Then only ECB can be taken and that transaction can be funded. Not for normal trading and all, ECB cannot be taken, or for just normal investment, it can't be availed. Yeah. Another very important change in ECB regulations is when you're borrowing from outside India, basically what the government has done, they have increased the limit of borrowing. So what happened? It increases the flow of funds, and the Indian entities can take advantage of that and execute their projects which require a lot of funds. So earlier, the limit of ECB borrowing was $750 million per financial year. Now it has been pegged to net worth. So an Indian company can borrow up to 30% of their net worth as per the last audited balance sheet, or $1 billion, whichever is higher. Further, any financial sector regulator, any borrower, any financial sector borrower which is regulated can avail without any limits, can avail ECB without any limits. Earlier, there was a requirement of 7:1 equity liability ratio. That was mainly when you were taking ECB from foreign individual lenders, that when you're borrowing the funds, you have to ensure that there's a liability equity ratio of 7:1, 7 liability, 1 equity. But now that has also been removed. There is no restriction of maintaining any liability equity ratio while taking ECB. Yes. Yeah, so MAMP is the minimum average maturity period. In the earlier regulations, the MAMP was it had actually multiple category, like for working capital purpose, for general corporate purpose. There were different MAMPs. Somewhere it was 3 years, somewhere it was 5 years, somewhere 7 years. So now this minimum average maturity period for ECB borrowings has been reduced to 3 years in almost all cases, except for manufacturing, where they are saying that it can be 1 to 3 years depending on certain limit, which is if they are borrowing up to $150 million, then MAMP can be lesser. It can be up to 1 to 3 years. Filing of returns. There has been certain changes in the filing of returns. The form ECB, which was earlier filed for availing LRN, that is loan registration number, and for reporting ECB, has now been changed to form ECB1. This form needs to be filed with AD Bank, and this is just replacing the existing form ECB. And now form ECB2 is required to be filed for reporting to AD Bank in case of any interest payments or in case of any principal drawdown. So earlier, the form was required to be filed every month. Even if nothing was there, it was required to file nil form. But now the rule is there, if you're having any drawdown or any interest payment in any month, in that case only you are required to file the form within 7 days from the end of the month. Suppose in a month there is no interest repayment, there's no drawdown, means basically no money movement, then you don't need to file the form ECB2. So that way this compliance has been relaxed. So yeah, I have tried to cover main points, what I felt were important and what people should know. So I end my presentation here. So I will just conclude by saying that whatever current reforms we are seeing by RBI in the FEMA sector, we can say that the government intention is to move forward a trust-based regulatory framework where they are imposing more and more trust on the AD banks, and RBI is moving to more on policy monitoring side. So we are definitely going to see efficiency and greater clarity in business going forward. That's my view. Thank you so much.
Thank you, Jivika, for a wonderful explanation of the current FEMA compliances or current changes in the ODI and FEMA laws. I think it's a very niche area. Not a lot of people are practicing in it, and it's a lot of scope is there because it's not like a simple GST or something which we do. It's like a very niche area.
Yeah.
So anybody has any query regarding the FEMA? I think it's such a complicated topic. You need a separate altogether one-on-one discussion with each participant.
Yeah, I'm free to take calls or messages if anybody has any doubt. Maybe immediately they might not have any doubts. Later also, if they have, they can reach out to me.
Correct. So thank you, Jivika. I think right now we don't have any queries, but in case we receive any sort of personal messages or something query, we'll forward it to you and hope for your response.
Thank you, Neeraj. It was really wonderful.
Yeah.
Sharing my thoughts on this platform, and thank you all the participants for your patient listening. Yeah, thank you.
Thank you, Jivika. So before we move on to our next speaker, I would like to invite our knowledge partner Ankit Agarwal from HVM Alumni to say a few words.
Hello all, this is Ankit Agarwal. I'm part of the FinTrack as well, and we are a part of the HVM Alumni. I'm in the as a member, and I'm also in the executive of the current HVM Alumni Association. So HVM stands for Haryana Vidya Mandir and school. So naturally we are a knowledge partner, and that suits more. We are striving to add more and more professionals into the community so that synergy has been created between both the FinTrack as well as the HVM alumni. It's lovely to attend this session of today. Looking forward for more such insightful sessions. Thank you.
Thank you, Ankit, for being a knowledge partner to this session, and hope we will have more collaboration in the near future.
Definitely.
So without any further delay, we come to our last speaker of the day, Mr. Jom Jose. Jom is joining us all the way down from Kerala, Cochin. So another state. So this shows the pan-India network from which we have the speakers. And I would like to ask Mr. Hardeep Narula to introduce Jom.
नीरज जी सिर्फ आई थिंक कि जम्मू कश्मीर से या लेह लद्दाख से कोई रह गया अभी, उसके बाद तो पंजाब शुरू हो जाता है, केरला पे एंड हो जाता है. पर चलो कंसीडरिंग me being north and south, चलो मिलन हो गया. So I think this is the moment everyone has been waiting for, the last speaker. So let me introduce Jom ji. CA Jom is a fellow chartered accountant and a registered valuer under IBVI. As a partner and Sam and Jom, chartered accountants, Kochi, he brings extensive experience in finance, audit, and business advisory. His deep interest in understanding how businesses create and measure value led him to the field of valuation. Very well. An active member of Bangalore Valuers Association, BVA, I think most of you have also heard about it earlier. Jom attributes much of his professional growth to the learning ecosystem, mentorship, and collaborative spirit nurtured by the association. Through his work and continued learning, he remains committed to advancing excellence in the valuation profession. Very well, Jom. It's all over to you now.
Thank you, Hardeep and Neeraj. It is a privilege for me to present before you, and thanks FinTrack for arranging this valuable session, wherein we are getting a lot of insights on various laws, regulatory shifts, and all. So today, like what has come to my table is related to the regulatory shifts which has happened recently in valuation. So as a registered valuer, last few 6 or 7 months is very interesting because many things are coming into the purview of registered valuers. Firstly, let me, whether my slide is visible?
Yes, yes.
It is visible. Yes.
It is visible. Yeah.
Yeah. So firstly, we'll come to the SEBI related amendments. Like recently, in December 2025, there was an amendment related to the employee benefits related valuations. So therefore, like employee stock options, RSUs, SARs, and sweat equity, earlier which was required to be valued by a merchant banker, now independent registered valuers, which is like IBBA valuers recognized under Companies Act, they are mandatory required to do the valuations. So everything related to ESOPs and sweat equity, the registered valuers has come into the picture rather than merchant bankers, which is bringing more expertise and independence to the valuation for these areas. And the other one is there is another notification which is related to open offer shares, like where there is acquisitions happening and all. Like earlier, merchant bankers were handling these valuations. Now it is moved to the registered valuers itself. So it's a like if you see these amendments, like, we can see like earlier the merchant bankers were dealing as the advisor to the main Acura itself was doing the valuation. So that was affecting the independence and all. Now it is a good move that it is coming to registered valuers, that so that the it will be more independent and the professional valuation will happen in these transactions, and minority interest will be taken care of since an independent valuer is doing the valuation. These are the major two updates which has happened in SEBI. So earlier merchant bankers was there. There is also a 9-month transition for the ongoing assignments, which is already done by merchant bankers. Otherwise, like from 2026, the registered valuers will be required to do the valuations for these ESOPs and as well as the open offer issues. Then coming to the Income Tax Act, the valuations and Income Tax Act 2025 also is recognizing the registered valuer, but it's not like in the act itself they are defining which there is a formal registration mechanism and a compliance obligation. It is not that they are bringing in Companies Act registered valuers straight into income tax valuer. So there will be a separate registration. There is a separate qualification, registration, and fee framework they have mentioned for valuers in new Income Tax Act 2025. So ideally, it will be in line with Companies Act, like the rules it is mentioning regarding there is rules that the professional should have these many qualifications. So in that, the registered valuers thing is coming under Companies Act, if there is that is coming up. So there is also a penal provision which is coming as penalty for incorrect valuations. There is a even if we are issuing, the assessing officer can charge a penalty on the valuer. So it is coming as the compliance, everything has to be there is also a standard valuation report format also specified in Income Tax Act 2025. So even there won't be any conflict of interest or independence because of this regulator framework which is coming into the Income Tax Act. So these all are the new things happening in the valuation era, wherein registered valuers are getting more highlights into the profession. Like even Income Tax Act also is having a separate registration, but in line with Companies Act, registered valuers, IBB valuers will be getting more focus onto Income Tax Act. So that's all are the major updates which I wanted to discuss. Thank you.
So still, Jom, I think still after this act also there, so earlier there was a lot of issue with the fact that in income tax there are chartered accountant and MD were doing the valuation. In FEMA somebody else was doing the valuation. Company that somebody else was doing. So whether we have now moving to a place in which ultimately registered valuer will become the sole valuation authority?
If you see, like in income tax rules, they have mentioned it separately. The income tax itself, they will be bringing it as a separate. They will be regulating the registered valuers who are doing the valuation in income tax. So it is not going to be a sole thing, but the registered valuers who are under IBABI will be coming as the main platform. Will be recognized as the sole professionals who are eligible to value the assignments, and but they have to register separately under Income Tax Act as well.
Okay. So even though you are a registered IBBI professional, you need to get registered separately with the income tax.
Yeah, separate registration is there. There is separate, like there is a particular format which is given in the Income Tax Act, which that registered valuer has to follow. So the regulatory body will be income tax. The income tax authority will be coming as a regulatory body for the valuers.
So has the registration process started?
The draft rule is still not published. So after that, only the registration forms will be coming.
Okay. Thank you, John. I think Nidhi has one query. Nidhi, you can unmute yourself.
Yeah. Hi, John.
Hi, Nidhi.
Is my voice audible?
Yeah, you're audible, Nidhi.
Okay. So, John, I have a question. Like in the takeover rules, the SEBI takeover rules which you just spoke about, which earlier merchant banker were doing, and now it is being replaced to registered valuer till their ongoing assignments which they have is being completed by 9 months. So I just wanted to understand, like, if the takeover happened in the month of March this year, 26. So, whether the valuation for the takeover of the company will be taken by registered valuer, or will merchant banker will do the valuation?
So it is mentioned as ongoing projects. Like, so if it is the merchant banker is already onboarded and the engagement is already assigned to him, he will be able to, because there is a 9-month transition period already eligible for him.
So basically, till 9-month period, a new assignment can also be given to merchant banker, and he can do it till 9 months time.
But the documentation,
It is in such way, or like
that engagement should have been happened before to this December rule itself.
December rules.
2025. The appointment of the merchant banker for this valuation should happen before this
December.
December, yeah.
Okay. Thank you. Thanks.
I think Jivika has one query. Jivika, please.
Yes, John, I just wanted to know whether currently RVs are allowed to do valuation under Rule 11 UA.
No, currently in Income Tax Act, new act, like the old act, it was the registered valuers was not recognized. Like only it was mentioning as independent chartered accountants or merchant bankers.
So okay, I understand in Act is not provided, but as per practical experience, are income tax officers accepting report? Because sometimes we get inquiries from the client that you issue the report as RV under 11 UA. So are income tax officers accepting RV issued reports or not? Even though it's not provided in the law, I know.
I have a practical solution answer for this. So what happens is a lot of time registered valuers who are chartered accountants. So when they sign off the report, they also mention chartered accountants in their designation or qualification, right? Income tax generally, and see UDN is mandatory for everybody. So you're generating UDN as it is, right? Income tax officers sometimes they fail to then differentiate between registered valuer and chartered accountant. They say, okay, it's a chartered accountant report, and they accept it. So I have seen cases in which even my report, which I've given just for purely I've written in the report, it's for Companies Act purposes and all, that report has been submitted in the income tax assessment case, and income tax officer has taken note of it. So,
but you have signed as a CA.
No, I have signed as a registered valuer, but the UDN is there, okay, and in my qualification, chartered accountant is mentioned, okay. So income tax has taken note of that. Okay, this is signed by this is being done by a chartered accountant, so we will take it. So they have taken like noted of it. It has been submitted by the client, even though the purpose specifically it was mentioned that it is only for companies, nothing for income.
The details, the purpose and all what is mentioned in the report.
Correct. So this has happened with me. This is a very current case which has happened. Now what happened was that in such a case, so we have done the report as per income company tax, right? So of the income tax has a certain other purview. So then they came back and then the client came back to me and said, okay, why you, this is the point, the income tax is raising, this is not. Then I explicitly told them, my report is only for company tax, not for income tax. As a client, you had the report you have submitted, that is your purview, but I will not be able to, guide you or anything with this purpose because my report was not for income tax. So coming to your question, I think practically sometimes this is happening, and I have seen a lot of registered valuers, what they do with their chartered accountant. When they are signing the report, they have a stamp properly made saying registered valuer and chartered accountant. Okay. So this type of activity is also being done by the chartered accountants who are registered valuer also, so that they create a confusion that my report is for both purposes.
But I am a company secretary, okay? If some client comes to me and tells me, no, I want a 11-year report, I am telling him, no, my report might not be accepted, but they insist, no, you give the report. Then can I go ahead and give?
No, so see, this is purely on perception basis.
I'd like to add something here.
Yeah.
What income tax basically says is the valuation needs to be done by the current income tax says it should be from a merchant banker. And there's a 11 UA calculation. Some formulas are there. That calculation, any Tom, Dick, and Harry can do. So though your clients are basically asking for that calculation, not the complete valuation report, because income tax does not. So income tax till now had a word called accountant, not chartered accountant or anything. So only accountant, whoever fits in that accountant definition can sign that, but they have not allowed accountant to sign under this valuations under income tax. So what clients generally right now are asking are the 11 UA calculation and not the valuation report.
But if Ashwinji, there's one point here that once the client will just not ask for the calculation, they will ask you to write the purpose and all, mentioning the 11 UA clause as well as the section 50 CA or whatever. Now, as a company secretary, or even if a chartered accountant is not allowed, whoever is not allowed, they can. This is now more of a perception case here that if I am a person, I'm a chartered accountant, and the law doesn't allow me to sign something, how can I put that, okay, I am signing it off with this section, right? For example, if you are a doctor and you are a dentist or something and some heart case comes to you, you are a doctor, but you should not sign it off, right? That, okay, that patient can have this heart issues, because the law may say, okay, doctor, see, there's a differentiation here. So calculation wise, it is any calculations you can do for any act, even for FEMA, whatever, even if they're not allowed, that is fine. That is for internal management purpose. So we generally, what we do is, when we are giving a report in which we are not actually allowed, so we mention it is purely for management internal purposes and not for any section, specific section, because if a section doesn't permit me, I cannot take the that section. That is my perception here. Now I have also
like to add here, yes. So what the act says is, for merchant banker, they are allowed to use DCF method only. And for 11 UA, there's a calculation.
But that section was only 56 to 7B, what you are talking. That was the angel taxation part. So angel taxation is it's already gone, right, for current year. So majorly what is happening, if a new funding is coming up, then the client is taking the report under section 50CA, which is that, I think that 50,000 se basic, I think that one. So there the thing is written. Now if you come to 11 UA, there the word accountant is mentioned. Now accountant, basically the definition of accountant is chartered accountant, cost accountant, and merchant banker. Not even there also there is no company secretary. So where in the law can you, as a company secretary properly, can you do any sort of calculation and mention income tax? That from my perspective, it is not allowed. It is just like a paramedic giving a report for a doctor.
Agree. I agree to this point, yeah.
Points noted.
Nidhi, you have one query? Nidhi?
Yes, I'm there. Sorry. So, Neeraj, like, I want to, say in front, for 11 UA valuation. So, it is written like merchant banker or a chartered accountant. It's not written merchant banker or an accountant, like in the section. What my understanding is, like, as a chartered accountant, you can issue 11 UA reports.
That is correct. It's mentioned accountant, and the meaning of accountant word is cost accountant, chartered accountant, merchant banker.
Yeah. So, if a chartered accountant like me, I am a registered valuer also, and I'm a chartered accountant also. So, my understanding is that like I can issue 11 UA report in the name tag of a chartered accountant instead of a registered valuer. So, is my understanding correct?
So your understanding is somewhat correct that since the law is only stating chartered accountant, so the definition of registered value doesn't come into picture. So whether you are a registered valuer or not doesn't have any meaning here. Even if you're a chartered accountant, if you're not a registered valuer, then also you can give the report.
Yeah.
So there, now registered valuer as a degree, if you are introducing yourself, then you can in the degree portion you can write registered valuer. But when you are signing the report, wherever you are signing the report, that is the capacity in which you are signing, you have to write chartered accountant, not registered valuer. If you are signing a chartered accountant, maybe you are associated with a CA firm. If you are associated with a CA firm, you are issuing the report in the letterhead of the CA firm, not the registered valuer. So registered valuer, only at the introduction, you can put in your qualification that you are BCom registered valuer and etc. etc. But nothing in the signing area. Signing area only partner of the chartered accountant firm. That is the capacity in which you are signing the report.
Yes. Correct.
I have one last question for Mr. Zoom. This you mentioned that for the valuers, registration is required with income tax separately, right? So, but has the Income Tax Act been amended to include registered valuers? Like right now, we're discussing 11 UA, right? Where merchant banker is mentioned, chartered accountant is mentioned, but registered valuer is not mentioned. So that also needs to be amended, right? So has
in the new act, they have specifically brought in a section wherein the valuer definition has come. Like so that valuer is who which is registered under Income Tax Act.
Okay.
And they have given the eligibility criteria. It doesn't mean in the eligibility it is not mentioned as registered valuer as such. It is mentioned as like similar to how we do in registered valuer qualification. A person who has done MBA, who has like, and there is also a criteria wherein they are mentioning the fees also. You have earned more than 1 lakh, I think, 1 lakh fees during last 3 years from valuation. Then only you will be able to register in under Income Tax Act. And there is also separate fees to be paid.
So this is effective from 1st April, right?
Yes.
So what is happening here is, as per my understanding, is because all the acts are fighting among themselves, because income tax is saying, why will we accept anybody who's registered with Insolvency Board of India? What is IBBI? IBBI is not a specialized law for valuation. Okay, so then if you want to do any sort of valuation under income tax, you register with us also. So that is that this type of fight is happening between all the acts. Until unless a specific valuation act comes into picture in India, that NIV, which was coming in 2020, 2021, till the time that comes into picture, this type of issue will continue to happen. Because the act is now not saying that registered valuer with IBBI can do income tax valuation also. The act now, I think the change will say that, okay, you have to register yourself with income tax. That's a separate registration which comes into picture.
Correct.
Last question.
Yanzi.
When you only the section which we will quote is 56 to 10 only, no, in the report.
56 to 10 and I think 50 CA. So one is for new funding and one is for the transfer, I think.
Okay.
56 to 10 is transfer.
Yeah, 56 to 10 is transfer, correct.
I think this ends our Q&A part for the JOM session. Thank you all of you for joining this session. Thank you, JOM, for taking out time and delving into the valuation field, the changes in the valuation. I hope we will have another session with you, primarily on all this valuation things, and you will enlighten us with what is happening in the world of valuation. I will also thank all the
team.
Definitely. I will also thank all the speakers, the moderator. Special thanks to our co-moderator, Mr. Hardeep Narula. Entire day he has taken out from 11 to till 2:30, and I think he has done a wonderful job in moderating the entire session. All the participants who are there right now and who have left, Thank you for taking out time on a Sunday and spending time on compliances. I know sometimes it can be boring, but our aim was to make it as learning and as maybe fun-filled as possible. So yeah, this is the final session of Interact for this current year. We are coming back again with next New Year themes. Next session, we are hosting the international practices on ESG, on which international speakers from Netherlands and Belgium will join us. And we hope to see all of you there also.
It was boring yet interesting, like I would like to say. And see, seriously, I'm an impatient person. Honestly, I don't know how till this time I'm still here. I'm glad everyone is here.
Thank you all. Thanks, and we'll again join back in April for our next session. Thank you.
Thank you, Neeraj. Everybody.
Thank you. Goodbye.
Bye. Have a good day.